Hey. Let's get this closer. I got the dishwasher, not dishwasher, the laundry running. It's noisy this morning. Well, well, well. This is what we needed after a massive dump. Just a gap up. Now we got to stress about a gap. Great. That's all we need to worry about, huh? I mean, it ain't looking too hot. It ain't looking too bad, but it ain't looking too hot. I'm not a big fan of a big gap after a... It's like not a huge gap, I guess. But I'm not a fan of that. I just think it's silly. Not what you want. So this closed at 4:05, which is fine. I mean, it's above the floor, and it actually looks like it had kind of a double candle bottom on the 15-minute. So it held for about 30 minutes at 4:02 yesterday, which is good. But I don't know, man. The idea of having like a sell-off and then just like gapping up the next day after like a big sell-off, I'm not sure if I like that kind of stuff. It feels like a just kind of like a dead cat bounce in the making, you know? Like, oh, you're gonna pop, go back up, check a level, and then drop again. You know, it's just not cool. Not cool. So we'll see what happens today and tomorrow. I would have preferred to have been a little bit flat. I'm not going to complain about green. That's not really what it is. I just don't think this kind of a bounce means a whole lot until you see some real serious follow through and support. So that's where I'm at this morning. Where are you guys at this morning? Everybody staying warm? We got a little frost this morning down south. Some of you guys are like, I've been in 3 feet of snow for 40 days. And I'm like, yep. Well, not here. I will be going a little bit north for Christmas, so I may see something. I don't know. I think it's supposed to rain where I'm going. It's going to be a rainy Christmas. Well, that's like the worst because it's like cold, but it's rainy. And you're like, you know, if you were just like a few degrees colder, and that's not actually true. But if you were just a few degrees colder, it could be snow. I'd rather just have snow if it's going to be wet. I said that's not actually true because technically, like, it could be below freezing, like ground level, and it could be like, that's why you get like freezing rain and stuff because the atmosphere is too warm. So it's cold enough to freeze, but it's not freezing in the upper atmosphere before it comes down, so on and so forth. And then vice versa is true. You get like hail when it's like really frozen up there, but then warm down here. It's like weird weather stuff. But still, I'm not happy that it's supposed to be like cold, like 40 degrees and raining. And I'm like, come on. I can't even remember the last time I saw white at Christmas, but I guess it was probably when I was a kid, to be honest. Mild in the UK? Yeah. I lived in Illinois for a bit when I was a kid, and we saw white Christmases pretty often, which is not like super north. It's kind of like, it looks like it's in the middle of the US, right? But like, you know, according to the world, it's actually still pretty decently north, so we do get a lot of snow. You guys are like, well, yeah, Chicago. Yeah, but I lived in like southern Illinois, like closer to St. Louis, so Missouri. So it's just kind of like, all right, you know, you don't necessarily expect that kind of place to get a lot of snow. It does. It's a decent amount. I would be really excited if we got snow, mostly because, not because I like want to do anything, but mostly because my kid. I feel like every kid deserves to have like one good white Christmas. He's had some snow like around the holiday, but usually don't get snow until like January or February. At least where I live. But it'd be cool for him to get like a snowy Christmas. Add to the magic, give him a good memory. You live in Missouri? No. I said when I was young, I lived in Southern Illinois for a time. I suppose it doesn't reveal too much, but it just, my father was in the Air Force, so like we moved around a lot. So I was born overseas, and then I lived in like a bunch of different places, which is why I don't have a particularly strong accent, but occasionally I sound Southern, occasionally I sound kind of Northern. Anywho, so yeah, Southern Illinois, which is close to St. Louis, Missouri. Missouri. Missouri loves company. Ha 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 ha. Just kidding. You guys are like, that's not funny. Especially if you're from Missouri, you're like, that's not a funny joke, man. People make that joke all the time. Can you tell me if Nuke had a 26,000 technical breakout, or was that news? We did look at that yesterday. I am in misery. Well, you know, the holidays have that kind of way about them, don't they? If you're not feeling particularly good, the holiday season tends to make you feel worse. And if you're feeling great, then the holiday season makes you feel even better. You know, it's got that kind of vibe to it. Hey, yeah, we talked about this yesterday, this Nucleus thing. So there is a technical case for it, but I don't think anyone would have found it. There is a news, obviously. Archives strategic milestone with acquisition of a controlling stake in Star 26, a defense-focused acquisition company, provider of Israel's Iron Dome missile. Well, that's important. No, it's not. Yeah, so yesterday it did make a move. We were looking at it at 40, and I said maybe it could go up to near 80. It got like halfway there. It moved pretty far already. I don't know if you're going to expect it to necessarily continue, but whatever. I mean, here's the thing, right? Sometimes there is technical cases for things, but you would look at it like a ludicrous thing. Like it would not make any sense. And that's kind of the way it was for AMC, too. I mean, if I had looked back, there's a technical case that AMC runs to 72. There's a technical case that GME ran as high as it ran. It's right there in the... There's triangulation for it, which is crazy. But I think there's triangulation for a lot of things in the market that don't happen, which we've found over the last 3 years is often the case. So, like, if I had looked at this, would I have said, oh, I think it's going to run up from $1 to 70, 80 bucks? No. I don't think anyone in their right mind would have said that, but there is a technical case for it because there's a massive divergence that took place over about a year, and you can see that the divergence actually starts where we are now. Like it starts at the current level. So that divergence down in price action, this direction, it's basically a correction on that divergence. And then if you look at RSI, it's a channel. Do I think, again, anyone would have guessed that? No. And then what's crazy, maybe crazier, is the idea that if you had drawn that 50-50 here, you would have been accurate in determining where that price was going to go. How in the world could you have known that, Booksy, in advance? You'd have to have looked at this as like an M-cross, like a wave cross, which we do, but that doesn't usually give you like a perfect answer. And even if you had looked at that, you wouldn't know where the bottom is necessarily. You'd have to kind of know in advance to some degree, like, okay, I think it's finally making a bottom. But then it's just a complicated been a complicated estimation. You would have had to gone back to the middle here, and I did find them. There are trajectories that direction. We could argue about this until we're blue in the face, but they're going there. They hit. I don't know if that was, again, baked into some future plan, like somebody knew 6 months in advance that this was going to have some kind of massive turnaround and they were going to make $1 million or bajillion dollars, whatever it is. But I don't think that, again, I don't think reasonably, when you look at stuff like this in retrospect, I don't think reasonably any of us would have thought that would have happened. So a lot of this is going to be like latecomer or momentum trader type stuff. I said earlier, I thought if I had been charting it, I might have suggested it comes back to 655. So yeah, there's a long-term bullish divergence that marks a triangulation at the top to the bottom where it is. It does correct back to that divergence beginning. It's right when this stock starts going haywire right here. And that's all that you could really use, that and then the wave cross. And then there's some two trajectories here that do match to the target. Again, do I think that again, anyone would have looked at that even back here in June and said that's going to happen? I don't know. Maybe not. I feel like the same kind of person. Like I am that kind of person that would do that, but I don't think I would have for that particular stock. Like I don't think I would have looked at that and been like, that's going to happen. What do you mean you are that kind of person? I am doing that right now. Like I'm talking about trajectories that are really long term. Some of them are pointing towards potential massive moves here in January. Some are pointing towards massive moves in June, and then especially that February to that late 2025 to early 2026 area. I've been pretty consistently making a case that I think we're going to go really high, way off in the future because of those triangulations for that area. So yeah, like there could have been some people who looked at Nucleus and said that they thought that was going to happen. But when would you have gotten in? Like, I don't know. That's the tricky thing. This divergence was real long. It took a long time. I guess if you were just using RSI and this creek jump, you might have looked at this and said, oh, I think it's jumping the creek here. But this is probably the best way to do it. But even then, it's like, I don't know, man. This would have been a really difficult trade to assume. If you look at on the 4 hour, if you look at that moving average on the RSI, it did break out here, and then it held. So that would have been the time, like it held and then it made a higher low. So this would have been like a logical place to get in. But again, do I think that I would have looked at this and said it's going to go up here? Probably not, Now, I'm doing a lot of similar stuff right now for AMC and GME. We're doing a lot of long-term forecasting. And the truth is that I guess, like, it's just it's dependent on, like, what you want to trade. If I were trading something like Nucleus or whatever back when it was breaking out, I probably would have gotten out at, like, 6s. I don't think I would have assumed, or I would have at least exited part of my position. I don't think I would have assumed it would have just kept going and had this massive auto reaction type reversal. A lot of that's just based on the way I do the math. Like I would have tracked this down and then said, okay, I think it could go to here, and that would make sense because it's back at a supply, and that's it. Still a huge move, but I probably would never have thought it was going to go that high, But we look at stuff like AMC, and we're doing long-term, long-range forecasting. I mean, not trying to be a weather guy this morning, but but it is a bit odd, and I think it just depends on your perspective of the market and whether or not you are interested in actually catching like really big moves versus just getting out of a position as quickly as possible. Or if you're a swing trader, you may not care about like these macro moves as much. If they happen, they happen. You're just really looking at short-term, like basic stuff. Like you've got some parameters set up. You're just going to trade those parameters, and that's how you make your money. Everybody's got different opinions about what it is they want to do in the market. I've done both. I've done really short-term. I've done kind of all three. I've done really short-term swing trades, like 5 to 10% swing trades with just stocks only. It's a lot. You have to trade a lot. You can make money doing it, but you have to be really diligent and vigilant, meaning you have to be aware of what's going on in your stock that you're trading, maybe up to like 10 to 12 stocks that you're trading, and you have to consistently like kind of trade in and out of them. So you have to set up those rules. You got to obey those rules. You can do it. It's not the biggest money maker, as you might imagine. 5 to 10% trades is not huge. You'd be lucky if you're in a stock like AMC to get 30%, 60% swings here and there. But most of the time in a more stable stock, which is usually technically better to trade anyways, because it's easier to read, you're not going to get more than like 5 to 10% on like a swing. So can you do that? Yeah. You're going to get eaten up by like short-term gain stuff and all that junk that people talk about. But you can make a living doing that if you want to. Alternatively, you can do kind of like midterm, maybe is what I would call it, like maybe like 3 weeks to like 3 months, that kind of a trade. And that's usually where I might go to options. Like if I think within the next 3 months there's going to be a big move, I might get shares, or I might get options like at that point. And you can swing trade options, but there's a lot of danger in that, right? There's people that make a ton of money trading options that expire like the week of, but I don't particularly like that. I find it to be really challenging because you're basically playing hot potato. You need to like get in and out as quickly as possible, make your money and let it go. And I don't know, man, there's just a lot of different strategies in the market. So like when I talk about stuff like long-term trading, for me, what I'm looking at is like, if I think this is true, and I do, and if I think that this is very possible, and I do, long term, am I willing to wait basically like a year, right? Maybe more like 8 or 9 months in order to make a really good sizable amount of money. And if I'm not willing to do that because I can't do it, or if I'm not able to do that for other reasons, you know what I mean? Then it's not a good trade necessarily. It doesn't really make sense. So some people, like, I feel like when I talk about this stuff, a lot of folks are probably just like, I just kind of want to get out. So I don't really care that much about when it runs. The sooner the better. That's usually the motif, which is probably why the hopium people by the way, I guess I'm guilty of this now because I feel like I'm providing a hopium case right here for January. I'm trying to not do that. I'm trying to base it on technical stuff, and I haven't said it till recently, but that's a dangerous thing to say, right? It's like, oh, now you suddenly think it's going to run really far. Well, I don't know about suddenly. There's always been a sense of like there should be some upside here to meet this wave, and we just haven't done it yet. But do I think that it comes across like hopium? Sure. Yeah, it probably does. But I think that's probably the main reason why a lot of those people who are constantly talking about big giant pumps are making they're making a lot of people happy in the moment because they're thinking like, well, it's going to run up, I'm going to be out of this play, or I'm going to YOLO a bunch of options and make $1 billion and buy Lamborghinis and stuff. That's not really as attractive. Excuse me. It's not as attractive to say that it's going to take a year. And I know that this is not new to you guys because you're here. You're obviously listening to me. But it's pretty obvious that this kind of community doesn't really like that very much. When I was talking about stuff really back here and like going into January after we broke down and like talking about how it's probably going to take a really long time because this wave is really long. Back in 2023, even a year ago, talking about how I didn't really think it was necessarily going to come up till later if we didn't get a V-shaped reversal, because I'm like, well, if we don't get a V-shaped reversal, it's going to follow this macro waveform and it's going to be really slow. Is that appealing? No. But it's what I thought was likely if we didn't get that immediate reversal. And that's ancient history now, but I still talk about the same things. So like, it kind of just depends on your outlook on trading. We talk about these kind of long-term forecasts. And I think that would have been the case for like Nucleus or something, where if someone had predicted that back here in like, you know, 2023, saying like a year from now it's going to be back to the same spot, which is, by the way, what's going on, right? Because this is December 2023. I don't know, man. Would people have assumed that that's true, that this is going to have some massive short squeeze? Probably not. But that's one of those things. It's like, yeah, I don't think anyone would have believed it because it's too far out, you know? Far out, dude. Long term. And I get a lot of crap every now and then for people that come in. They'll come in and say like, well, this guy's never right. And I'm like, really, like, time is the only true answer to that, because in a lot of ways, calling out going to 14 and then maybe even going back down to 1 or 250, which is what we had talked about back in January, was like, this is a year now. We've been through the whole year. We kind of hit those targets. We didn't hit 1, but we definitely hit 250. We definitely hit near 14. I don't feel bad about those predictions. Like, I don't feel like I was wrong. Do I think my timing was off on a lot of that stuff early on? Yeah, of course. So when I look at this, I'm like, look, man, if by 2026, that's the key word, by, meaning like before then is possible, but it should be roughly no later than. If we're back up here in the 80s or 90s by that point, like, I've done what I need to do, like, I've made a good analysis that worked. Even if in the middle of all that you had 5 months of sideways somewhere and you had, a move that went up instead of down or down instead of up, like, who cares, Because long term will matter more in the end for more people. And the opportunity to like trade down in the 2s and 3s and 4s, if we do end up in like the 80s, the opportunity to trade down here will be a huge, huge blessing for a lot of people. I think that we kind of lose sight of that when we just kind of stare at the everyday chart. And like yesterday, I felt pretty confident going into the day yesterday that the IWM was going to crash. Like, I don't know what else to say, And so when it dumped, we had a few people come on talk on here that I'd never seen talk. I didn't repeat their comments because I thought they were just kind of throwing out random stuff. But they were like, we got to lock up all these people. They're crooks. They're dumping and pumping and dumping the market. We gotta, we're screwed. The market's bleeding out. We're done for. And I'm like, look, man, I get it, but like long term, this was already in the works. Like, there's no doubt about it. This is a technical move, in my opinion. I didn't flinch at all yesterday. Like, I did not worry about it because there's some really long term. Like, this started back in July. That's like 5 months, maybe, and some change of divergence on a pretty major daily RSI for a huge index that historically like has had these really massive pullbacks. These are basically like full retracements. It's not exactly complicated. There's very little that could have happened here that I think would have made it run. And kind of subverted those expectations. I think there's very little. This was absolutely 100% right there for the taking, So I was a bit of a bear on it when we talked about it like a week ago, because I said I didn't think it was going to run. And some of you guys agreed with me. It's not like everybody else was like, no, it's not, it's going to run. Some people agreed. We were talking about it a little bit. We have some targets at like 218 perhaps. There's a rising trend there. And I believe that's a daily 180 as well. That would be a logical place to kind of chill out and maybe bounce. If we don't get that, that area, 215 on IWM was a recent floor, and it's way back here, but so was like 200. And then I'm looking at these gaps because we left some pretty sizable gaps below that level at like 213. I think that causes a little bit more headache for folks because it would break down out of this other trend. And it would look kind of weak on the side of, oh, we're dipping beneath that moving average. But that EMA has been dipped before as well. Like when we had the FOMC in August and it dumped like nobody's business, it went sizably. I mean, it went pretty far below that moving average. So it would not surprise me if we got some kind of a massive quick drop one day to like 212 and then rebounded all the way up to 218 and just never looked back. It's kind of very similar to what we've seen time and time again on some of these dips that then rebound and hold. So a key like indicator here would be that moving average. I think that's the 180. Yeah, it is. So if you can't see it, it's because it's like lighter blue on my chart. It's down here. Let me make it a little larger. It's right there. Do I think it needs to go below that or significantly below that or significantly below 212? No. No. I mean, technically there are some gaps even lower, but like I think that those will be left alone, mainly because I think this is just a massive RSI S-curve. And in the end, guess what? In the end, this could be a potential divergence as well. You're hitting higher up. Your RSI is lower on this bottom. The price is a lot higher. You're resetting it essentially at a much higher price. So in theory, even if it was going to break down, I think you'd have to have some kind of reaction back up to like 230, even if it was going to break down. So like that to me is pretty big deal. You know, that you're essentially coming into where you could be at a floor and you might get a pretty easy like 6 to 8% trade out of that, and then some if it does rally. And I did the S-curve for it. I redid it, I should say. And what I found was that it made sense. If the intended target is 271, so I adjusted it from 252. So originally I had a 252 target. We didn't quite get there. We got to 245. I shifted it out because it just took a lot longer than expected. More like, not super long, just like 2 months longer. And so I shifted it out in order to see kind of where that would be. And I did the measurement from the beginning like I did the first time, but this time I put it on a level that essentially just matched where I think the target is. So there's a triangulation out here roughly around March 2025. And that triangulation would lead you to all-time highs that were consistent, you know what I mean, like going way beyond. But that move, if you're going to see it as an S-curve, which is what I'm trying to do, and if the S-curve is not done, which is an argument in and of itself, right, then you should, at this point when this resets, this is like the M in the middle. You see why this is important? So like we talk about this all the time on this channel. Like there's always an expectation there should be an M somewhere in the middle of an S curve. What that means though is if you're seeing this as the M, and I do, that means that this is it right here, right? Going across. Then essentially like there should be a rally if this ends up being an S curve that's about the same as the first rally, because that would be the distance traveled, right, needed to travel. Now, I, at this point, maybe would argue that it is going to be higher, but I suppose if you were being like really pragmatic, you would just want to like double this value instead. And instead of saying it's going to go to 270, you'd say, oh, I think it's going to go to 262 or something. And it has to come all the way back down to 205 and find support there. That's the real like halfway point right here. Well, yeah, I mean, it could. That's a really steep dive. I don't necessarily think we need to do that. I feel like we already got the checks we need. We double tested down here in the middle. That's pretty adequate for a middle check. So I'm not convinced that we would need to go that low. So I'm going to stick to my guns about this for now and just say that I think if it goes down to 212, we're likely going to see a reversal. I think we're going to see 270. So that's a big move, right? And so when I'm looking at this, I'm not fretting about it. I'm just kind of waiting. That's a big move for IWM. I'm waiting for this guy to show back up. The same kind of move we had at the bottom. And that's the move that takes you from the bottom of a range into an SOS. It's a markup through a range, right? You're starting to mark up. You're going out of that range, and then you're going to build support and then leave. And we would see something pretty similar here off of 212. So that level is a historic support level. You know, it's not exactly held perfectly every single time, but it's definitely close to the bottom of the range from 2021. So for us to tap that would be strength, in my opinion. I'm seeing a triangulation there anyways. And then to mark all the way back up through the range in order to make a new all-time high, it's kind of a 50-50 swing. Okay? So you're saying that you think it's going to go green all of a sudden? I don't say all of a sudden, you know. I think it's just setting up that way. Are there other possibilities? Could it go significantly lower? Yeah, I mean, I think before, and I wouldn't have any idea when I said this, but I know we had talked about 200 at one point because I could think again because of that, if that had broken down, there could be a pretty easy slide to like 200. I'm not convinced we're going to get to 200. I would say 218, that pocket, which is very close to where we are, and then 212 are the most likely places that we find kind of a bottom here. And it would make sense if that happens, that the rally could lead you to all-time highs. And we'll see. You know, from that point forward, I don't really want to speculate. I'd probably have to remake this chart to some degree. It's kind of messy at this point. Got a lot of old lines on here that I think they're important, but I don't know. It needs a little bit of TLC probably. So for AMC and GME, the same was true yesterday. I'm just doing a gentle recap here. We've only got 30 minutes on the day. Not a lot's happened. We're not really moving very far on AMC. GME's up 3.2%. We'll take a look at that in a second. But it was a similar story. Like this had a bearish kind of setup at the top. It was already completed, in my opinion. Like it had done its little rally for an auto reaction. So I wasn't expecting something else. Like it was pretty darn close to where it needed to go for an auto reaction, which was up to 442. And I think we hit like 440 or 439 or something like that. I'm not going to sweat 3 pennies. I'm not. So I don't care if it doesn't hit perfectly. The methodology there is sound, and that's why I used it. And that's why I talked about it. So I knew it was going to, when it made an auto reaction, it would probably make that size of an auto reaction. And then we talked about the parallels. There's a strong trend on the bottom here that goes through the upper M. That's important. You know, anytime you see that shape build, especially if it's going, in this case it was like RSI was going the other way. The strength was kind of waning. Volume was clearly like coming down, so there had to be like a retest downward. This is a really key zone right here. So like a lot of what we talk about is what's being established before a move. And remember that even though like I'm at times kind of a jerk towards people or whatever, I really don't want to be, but I'm working on it. But like that was where we were talking about it because and I had an argument with someone about, well, I think it's going to come back down because there was an established downward momentum that was being built out. And so keeping that in mind, had you seen this break below and it was really close, I don't think there was a way that, again, we talked about this already. There was like a barely holding on kind of bit here. I think if you had seen that as a distributive element, if you had seen that break down, which again, we didn't see it break down, not really, because it was that after hours announcement, you know. I don't even know why he did that, why he couldn't have just posted it during regular trading hours. That would be nice. That would be really nice for people. Just, I don't know. But anywho, you know, when people are trading, I guess, and they can actually do something about their trade, instead of when nobody's trading, and except for the big dogs and big money, and they can push it wherever they want to push it. But that breakdown, that would have been a good place to say, okay, well, I think it's going to come back here at some point. When does it get there? Will we have to wait and see, and so on and so forth. When they do stuff like this, you mark it off on your chart because it generates for you a downtrend that you can then follow. And then once that's done, you're looking at the reaction. This should be at some point a target, that peak. But the buying climax is, at least initially, not nearly as important as this drop zone. So again, like the reason that I thought that was the case is because anytime they do this kind of push up where it feigns the other way, and then you end up going back towards that creek, there should be like an S curve or a shallow S curve, and then you're going to get an auto reaction. And that auto reaction tends to be a channel marker, a channel setup. It's just the logic of the market at work. So that's the reason why I put that where I put that. And then ultimately, even if you didn't want to use the boxes that I like, always draw little boxes and stuff. Even if you didn't want to use that, which is fine, you could have pretty easily just drawn the parallel and you would have been right. Hey, no. Cat. He's like chewing on a Christmas present. So, anywho, what's the point of talking about all that, Booksy? It's already happened. The point of talking about it is that it hadn't already happened, right? Like when we were talking about this potential move, it had not happened yet, right? There was no... I'm watching you, Otto. You better not. And go right back to it, cat. When we were talking about this move, it hadn't happened yet. So when it did happen, could you have traded that? Sure. How would you have done that and made a good trade out of that? I mean, there's a number of ways you probably could have done it. What I would have looked at would have been probably the last creek here, which is what we were looking at. And that was the breakout that happened here. It's not a very big move. There's not much to trade there, but that's the move. If you're going to try to trade falling knives, like that's the move. You know what I mean? As soon as it breaks out, you have that target in mind, especially if there's a triangulation. And there is. Because we have a rising uptrend that we lost, which would be considered like a hook. Well, then why don't you just make a bunch of money trading hooks, Booksy? I don't know. Maybe one day I will. But, you know, if I were trading these kind of bounces after cat ears and junk, I'd probably also be trading the cat ears. It means to be trading like short. I haven't traded AMC short ever, unless I'm buying and selling like put positions. They talk about like how could you have made money, you know, on AMC over the last few years? It's the one thing that no one wants to do, right, in our community, which is to be a short trader. And then people just call you names and you get blacklisted or whatever. I've never traded it short. But, I mean, to be honest, most of the setups that have paid off really well, in order to trade long, you're trading these kind of reactions until these big moves happen. Like, there is no other trade. Like, this is the same trade right here. It's exactly the same trade that I'm talking about right now. You know, this move is the trade. You know what I mean? It's not complicated. I move this down. It's pretty simple. It's pretty straightforward. That's the bull trade in a downward channel. There is no other trade. You could trade this stuff, but it's not going to get you anywhere. And it's most likely, if it's shares, you're just going to end up flat. And if it's calls, you're going to end up burning out and getting screwed over trying to time it. And then until you get those big move and those big setup breakouts, which this is the only place that really, in the last year, really this is the only time that we've had that. I mean, it is. So, I mean, we had one good bull trade back here. That was really good. It was like 30%. I took that trade, but that's the only one I really took aside from this initial trade. That was a good bull trade. Every other trade that I did take ended up having to be stop lossed or just cut because it didn't work. You know? So same deal with the big picture. We talked about this as well, but it's the same principle. I know that this is the one that was probably the most confusing because of the shift and everything. And I feel like at this point, given everything we know, I would be inclined to say that it probably is correct, but I had thought it was going to be really slow. What I mean is that if you didn't have the shift value, it would have been difficult to know where exactly that drop went. So just like these measures we're doing on the short term, you could have done that on the long term. But I think it would have been challenging without having kind of this information to take that and anticipate any kind of a move, back to the upside. And in the end, it ends up going way higher than expected anyways. You could have used it from the breakout point and it got pretty close. I used like a bigger wave when I did it and got like 14s or whatever. But that was, looking back on it, that was pretty dicey. Like I know it paid off, but it was a dicey kind of a measurement because that shift is complicated. I think you have to remove one of these gaps and then maybe it would work. And that might be a better way to do it. I think I just measured all the way to the top, but really that even by itself would have been very speculative in nature. Yeah, this is correct. So using the from the top here, just removing the first gap, this gives you the right reactive move when it hits bottom. So how do you trade in a downtrend? That's pretty much all I could give you. I've never seen anything better, personally, in the last 3 years on AMC. Like, everything else feels a little bit just like, okay, I'm just watching for a reversal on a trend, and then I'm going to try to trade to the next trend, which is kind of what this is. But that's it. I mean, that's the move from the top of this gap to the bottom, and then from here up. It is exact. Really close to exact. Now what we're looking at is potentially, and that's a big word, potential setup that's like what we had in 2021. I genuinely think it looks almost exactly the same, but I know that we talked so much about bear side, and there's a lot of ammunition there. Like there's a lot of evidence that this is just bearish. So I don't want to get anyone into like a situation where they feel like they got trapped in a play or something. It's your choice whether you want to invest in anything, obviously. But I'm trying to be like really careful about how I present the setup here because it's like definitely there, but it has to have certain things happen. And again, I said we go over to GME, and I will. So if you're waiting for GME, don't worry about it. So I would suggest to you that here, the way I kind of drew it out, idea was like we would come down to 4 or 403, and we did. I think I said that verbatim yesterday. Like I thought we'd probably not stop at 415. I said that'd be nice, but really we just need to stop around 403 because that's where the floor is. If it can manage to hold here, then I'm looking for one more creek jump. Now what I've got, and then I genuinely think that this could be on its way, okay? It has to get back above this area right here around 457 on 460, and that's the kind of the golden standard right now for me. If I see it come back above here in the next week or two, I'm thinking it's positive. I'm not thinking it's just a head fake, at least for now. You never know in the market, guys. Like, it could still go up here and like have some kind of crazy head fake and turn around. So you have to be vigilant. But if it comes up here and it pushes above 445, which is a key level, and then it kind of wraps itself around 457, especially if it kind of breaches again above like 460s, like maybe up to 470, I think that's the setup. I really do. It has to kind of complete anyways a second wave because you have to have that M cross. Now the way that I did this is a little bit maybe a little bit misleading because it kind of makes you think that it's just going to like sit down here for the rest of the week. And that's true, it could, and then just rocket next week and then it's going. But that's not necessarily what happens here, because I was thinking about it after close yesterday, and I was like, even if that were the case, and it technically could go lower still, right? We don't know for a fact that this spring is done by any means. We've got two major sell downs here that are really heavy volume. I'm going to move this little box over. One's right here and one's right here. If it can hold this reversal after two heavy sell downs, I think that's a really bullish sign. Like genuinely. I think that's a very bullish sign that it's pushed down twice on really heavy sell downs, heavy volume, and the effort being put into this is not rewarding shorts. Then it's essentially telling me, if that's the case and it starts making higher highs, in my brain, what I'm thinking is shorts just put a lot of volume into a bottom that apparently bulls gobbled it up, and now they're pushing it back up. That would tell me that shorts are exhausted right here. So again, at the very least, if that were to go back up, you would say that it should be returning back to maybe even this gap level at 517. Has that happened yet? No, because we haven't actually turned around. We don't know if this is going to hold, yada, yada, yada. But that kind of a heavy sell down is a lot like what you see in these tops. When you see those heavy volume tops, like 1, 2, and there's a failure, in this case, there wasn't a failure to advance. We did advance. But if there was a failure to advance, you would be like, oh, so bulls are basically exhausted, and then sellers, if they start pushing through, can take over. That's essentially what we see in upthrusts all the time. So if I look at that, for me, it's like, yeah, that totally works. Logically, it's sensible. And then there's a mindset there that like, well, if it's already bearish, then this is just a precursor for that, so on and so forth. But got to keep in mind, like during a quadruple flush, as I call it, it's just a really compressed M. Like I've called it a quadruple flush at different times, where it's like 1, 2, 3, 4. It's honestly, it's just a Wyckoffean like bottom, and sometimes it'll even go down again and get like a spring or something. That's just a Wyckoffean bottom. Like it's not complicated. It's an auto reaction with a phase B top, and then it comes down and makes a bottom and maybe a spring. And if it's healthy, it stays high here usually. It doesn't go back below the original selling climax. Not always, but it does have more likely to be bullish if it's kind of holding well. Or if it does spring, it just barely goes below it, that kind of thing, right? It looks like I call it a quadruple flush because it's just like these massive, like 1, 2, 3, 4 moves. Really, you could probably add more to that if you wanted. This is like 6 moves, but it just rapidly trades a particular range. That is a spring action. If you go back and look at all of our springs that we've had on AMC, they all have a similar motion on the very, very bottom. Sometimes they're really dramatic. Sometimes they're a little smaller. But they typically have that violent, reaction with the swings, and they're finishing a trade and then they're moving on. Like institutional traders are kind of like, that's it. They're shaking out the last of whoever. I'm making a lot of big statements here. Like, we don't have confirmation yet. So just, again, keep that in mind. So anywho, when I'm thinking about this, I'm like, oh, so I said, I think on stream yesterday that I was like, well, if it holds here, you could just see it kind of chop and then maybe go into next week with a mild upside. In reality, this could be a lot more volatile because while I don't necessarily think it has to break out until Monday or even later, like Tuesday, especially if it makes another low or something crazy, like you could be in a situation where this is indeed accumulation, but it's going to go down low right now. It already did its 1, 2, 3, 4. That's possible, right? And so you could be going down now to test 393 again. That's not out of the question. In theory, it could have some really nasty reactions right here in the middle. And lately, we've had some problems with this because we actually have had some middle reactions like this guy that have been extremely volatile. So in order to like put that into simpler terms, I guess, it would not surprise me if it's a very volatile cross here. And I wouldn't be surprised if there was some extra swings in there that maybe were unexpected, like some really big pushes with some drops, assuming that it actually made that attempt to cross. So while I did have it kind of flat and going to the side, it's important to note that like the way this has been going for AMC, it's had some pretty massive, we did the same thing up here on this cross down, just some massive wave crosses that just they don't even really make sense sometimes. They don't look like they're the bottom. They look like they're the most volatile part of the trading, which is strange because, yeah, like a creek cross is a big deal, but to have these massive flushes, it really feels more like just like a game to me, like a way to trap people in a play. So yes, KMK, you are correct. We've only confirmed the loss of the broadening wedge. We're sitting in a demand zone. Yeah. So the loss of the broadening wedge, there's two ways to measure a broadening wedge breakdown. One is, the most common one is just you return back to the beginning. This is a case where you might want to use a different one, but like I think there's another that's like, I'd have to look. I don't want you to quote me on this. I could check real quick, but I think it's like a percentage of like 30% or something, or 40% from the breakdown point. So it'd be like 380s or something like that. You know, there's two different ways to measure it, because you would have to have two different ways to measure it, because sometimes if the wedge is going up and then it breaks up, you'd have to have a way of measuring that, because it's obviously not returning back to the bottom. So Bulkowski does statistical measurements. What he does is he takes like 1,000 different trades. He really does. It's like usually a significant number of trades. It's usually almost always at least like 700 or something. And then he looks at statistics of like what happens after it moves. So it's a pretty reliable system. And then he gives you a percentage of it meeting a target. And that's what you use to help determine the breakout points. For the wedge, the broadening wedge that's going upward and then breaks upward is one of the most bullish market patterns. I've only ever seen that on S&P 500 personally. Like, I'm just saying, like, from my experience, I've never seen a broadening wedge that's going upward break upward, except on the S&P 500, and maybe in that August, you could argue it maybe in that August 2022 AMC move, but I think that one was contained in the broadening. So that's the argument, is like you could say, well, the broadening's lower and it broke out above. Again, maybe. But in terms of like a breakout that then continues, especially if it's at a top, that is this kind of a move right here. I've only ever seen this happen on the S&P 500, where it like makes like a higher low and then continues. Maybe GameStop has had a couple of these now that I think about it. But anyway, so you use those measurements to help determine where it could go. But the most typical way that a widening occurs, if you're going up and it's widening up and you see a loss of volume and all that jazz, usually it breaks down, right? And the initial place it's going to go to, the trade itself, is only back to the beginning of the trade. Now, if this is the case with like a large funnel, this could be very dramatic. This has happened before in a lot of charts where it gets like really wide and it goes up really far. And then it breaks down and it's like, oh, it goes all the way back to the beginning. Again, you would need to have some kind of way of measuring that if it didn't do that and it went up, because then you can't just say it goes back to the beginning. So it's a reversal play. It's a rising wedge in some ways. A widening or a narrowing with certain volume changes could indicate a change of direction. So it's very similar, right? In that the wedge often, one of the targets on the wedge is back to the beginning of it. But for the wedges, I like to use the 60% or whatever it is, because I think it works better, like the 62%, which is often the case. It's weird, too, looking at it big picture, because sometimes you'll be like, oh, 62% is the beginning. like if you have a wedge and it, you guys are like, why are you talking about wedges? I don't know. I'm just talking. You guys could read about it, or I could just tell you about it. Maybe some people don't know this information. If you have a wedge and it breaks down, like right here, you could use something like this. It's usually about 62% roughly. So if it broke down like right here and it narrowed, it might drop back down to like 62%. Weirdly, a lot of times that is near the beginning of the wedge, as in the market almost maybe self-fulfilling prophecy wise, but they almost like predicted it, right? That's kind of crazy. Do you guys see this on my screen? I actually accidentally created a rainbow. Look at that. Blue, blue, green, or closer to yellow, orange, red, violet. What? What? Well, the violet's only there because that's the price action. Did you do that on purpose, Booksy? No. But isn't that crazy? You guys are like, who cares, man? I don't know. I think that's crazy. Rainbow. So, like, technically, this breakdown, one of the targets would have already been finished. The other target may be a little bit lower, like 380 or something. I'd have to go double check that number. It would have made sense to me if it had come back down to 4, and it did. It went below that, which again, it's kind of like, could it have been a spring? Well, there's a lot of volume here, and there's a lot of volume on this bottom area. So potential spring action, yeah. It's ugly. It doesn't look pretty. It's not fun to watch. It's edge of your seat action. But if I'm just judging this not based on this idea that like, oh, we had a dilution and it's going to be, we're screwed until the offering is done, or whatever people are saying. Look, just look at the volume. There was a big push up after it made a floor here, and then it dove back down beneath that floor. High volume going into that bottom, high volume sell down, high volume on the bottom. It's not impossible that this is indeed a spring. I had kind of neglected that, I rejected that idea before, because I think it was my mod. He's on here usually. I don't know. He's not on here right now maybe. But I think he had said something like, well, could it be a spring? And I was like, I don't know. I don't think so. But the reason that I said it didn't think it could be a spring was because it came ridiculously high here. So what's confusing about the setup, and the reason why we haven't really liked it from the bull side, is because it went really high. And what that would mean is that if this was indeed like a spring action, that it now has to go all the way back above 560, because this top would be where that creek is. It's super high up. Well, that's not cool. Like, that's basically what you're saying is you can't confirm this until it gets back to the top of the range. You're going to miss a big portion of that move. And it's a very dicey move, because it's like, why would I buy here if confirmation's at like 560 or something? It makes it very skeptical, right? I think that the same would be said for 2020, though. So, like, I don't know, I kind of like dancing around these same ideas. I know some of this gets a little bit repetitive. I'll need to switch to GME in just a minute, but let me finish this thought and then I'll go over there. The same thing would have maybe have been, I think you could have made the same argument, for 2020, that would have been a really difficult trade to presume. Like, I already told you guys, and I already believe this pretty firmly, that the RSI and the on balance volume look basically the same. But at this point, this creek is like got the wave cross. It's real nice. But the breakout, if it had made a bottom here and then you got a buy-in, the breakout still would have been pretty high up. Like, it would have been right here, probably around 2040, which is about halfway up the range. That's still better than all the way at the top of the range, right? Like, if you had waited to the top of this range, you missed 60% of the move. So that's not cool, right? So there's a risk on proposition here that like once it made that low, if you think that's a spring and you see that buy-in right here, the volume pick up on the bottom, that once it made that spring and then confirmed support, that could have been a buy-in for you. And I think that would have been a more risk on buy-in because you'd have to have been like, yeah, it's going to go jump the creek now. But you see how like this setup, it does have a bit of risk involved, but it's really only about 30% of the move. And then when you look at where we are, it's like, oh, geez, like in order for us to see the same thing, you'd have to come way back up. Way back up. Why'd you turn into a horse, Booksy? I don't know. And you have to come way back up to get to the top here. I mean, maybe you could argue like, well, it's really like 515, 520. But technically, like, it's super wide. It's up there. So it's really high. It might as well just be flat. That's not an easy trade to take. So we're talking about kind of like a subliminal reading between the lines breakout here. And even like that other guy, I don't remember who his name was, but he was like, there's no technical reason for this to break. He's like, it lost all of its moving averages and this and this and this. I'm not going to go so far as to say that he's wrong, because he's not. But I would venture that if we make this move up to where I've been talking about, like this is going to confirm a lot of stuff, a lot of reversals. So this is a 180 right here on the 1 hour. That's a 180 cross on the 1 hour. Let's go to 2 hour. It's the exact same. It's a 2 hour cross right here. Let's go to 4 hour. Where is it? It's a 4 hour cross right here. 457. Wait, Booksy, how is that possible? Because it's right. Because that's where it is. That's where the intersection is. I didn't make it. Somebody else made it. Now the daily is still way up high, but it's starting to look like that daily is right here where we need to cross the top. Now the daily is literally below in the range. We can jump the daily within the top of this range, which is crazy. We couldn't do that prior to December 2nd. But now we can go to that daily 180 up here. It's really, really close to like near that that jump that we need to make. It's right there. So this is it right here. If you can see where my mouse is, it's at 577. And I don't know about the weekly. It's probably way off. Weekly's at $20. That's what's going to happen, Booksy. I mean, maybe. I don't know. I haven't looked at it in a while. It's way up here. It's at like 37. I genuinely don't think we're going to hit the weekly, but you never know. I mean, it's there. I guess if it did go and it broke the weekly, it would fill this 45 gap. That would change a lot of things, wouldn't it? So anywho, I think that that about summarizes what we need to talk about for AMC this morning. So I'm going to watch AMC and see what happens, see if it tries to go to a new low, see what happens around 397 if it does go down. I'm really more concerned about 402, 403 at the moment, and see if sellers have enough oomph to take it down. I suppose it hasn't broken out yet from this trend, so this will be one we could watch today. I might even just set an alert on it, just because if I'm not looking at the chart, that way we can hear it happen. I'll hear it happen. GME, kind of the same story. It hit a double top. It hit that parallel that we've talked about frequently. I'm going to do a little less of a recap on GME, as I think it took a long time on AMC. But I'll just say this. It was already kind of positioning itself in a breakdown mode. All it had to do was lose 30.60, and it was going to probably drop down to 28.8s. So I had said yesterday, this is exactly where the arrow is. I had said yesterday, I didn't change this. This is exactly where I thought it would go. Like basically I said like 28.8s, 28.9s. It did go lower. So during the sell down, it went to 28.34. Did it break beneath the creeks? You tell me. I mean, in some ways, yeah. In some ways it did, because it did break beneath the top. There's no doubt about that. It broke beneath these top wicks. 100%. When you look at the body of the creek, like where are the majority of the candles beyond these distributive elements, I would say it did not. It did not break through that previous resistance now acting as support. I mean, it's right there. I don't know if you guys can see it super clearly. Sometimes this chart with the colors can get kind of like dicey, but I like to keep my colors light because I'm staring at a screen for like 6 hours. Like I don't want to burn my eyeballs, but with like too much high contrast. So it's just easier for me. But I understand like sometimes probably on your screen it could look really different. So this looks like it held. And at least for now, that's a positive. Even if it came back down again, it just has to make a higher or equal low, and it would be probably fine. The one thing you don't want to see happen right now on GME is a lower low. Why? Because that's a sign of weakness. If this is indeed a stopping point and it is right on the creek, then a lower low could indicate that somebody's trying to take it down further and that sellers have enough strength to push right through that wall again and push low, which would then indicate probably that you're going to, again, maybe head down again, which is often what happens on these bottoms is you get like dips and then you get another dip and then so on and so forth. I'm looking at a 30-minute chart right now. Let's go to 6. Right, so this is a really small distribution, really, really small. The same principles apply as elsewhere. I can't tell timing-wise which hit first, but it doesn't really matter because this was making like higher lows and then it goes up and it pushes above the top, it goes below the bottom, and then it makes a decision to head down. And that's the cat ear right there. So these are looks like double top, and then it makes a slightly higher push by like a penny and then drops down. So what I would then look for on the micro here, and it might just be that filled a gap. Let me see. Closed at 28.55. Nope. So it actually closed low here. So even though it looks like it came back down to the top, there is a gap at 28.55. So that's not a problem. We could go down there. Like I wouldn't break anything. I'd be looking at these guys as a potential hook and then maybe like slightly higher. But yeah. So we'll see what happens. If volume it's kind of dropping right here. If volume continues to drop, I'm inclined to think we don't just go right back out here. We haven't filled that gap, and I mentioned it kind of very first thing. Like I wouldn't really like that. I don't like that idea of like, oh, we dropped really far and then we made a gap. So this jumped the creek, which is good from the top. So I would say that most likely, if this doesn't continue right now and jump back above 29.90, big question mark. If it does, who knows? But that also is the floor from back here. All right. I think if it jumps 29.90, then you're probably going to see continuation because that would be like recapturing the range. You just leave, more than likely. But I think any kind of rejection up here around 29.90 or even slightly lower, I think it's going to send you right back down. I don't think this is finished yet. I think this is just like a small piece of like a bigger reactive bottom. So, that's what I would say. It just seems most likely. It doesn't mean that you necessarily know what's going to happen. Obviously, if it broke out, it broke out. But it gives you an idea of like where that would need to be. This is just common sense, I think. Nothing really special about this. That's just where the floor was when we came up. So right now we've crossed it. I like to do my 50-50s. You know I'm all about that because I like to see if that made sense. It does. Guys, I don't know what to tell you about this rule that would make it any more sensible than I've already made it. But like, it's just a really common, like if I ever wrote a book about the market, which I probably will never do, but if I did write a trading book, you guys are like, why not? I just don't know if I could. It's hard for me. It's hard enough for me to gather my thoughts here. It'd be really difficult to do it in like a written format, but if I ever did, I would talk extensively about the idea of like pushing away from a resistance or a support in order to drive through, you know what I mean? And vice versa. The idea of springs and upthrusts and how many times they 50-50 around floors, and like when you start seeing it and identifying like where that's probably going to be, then it's easy for you to predict. So yesterday, I don't think I said that. I think I said 380s. I was probably looking at this bottom right here and saying, oh, I think it's going to, not 380s, excuse me, like 2880s. Like, oh, it's going to 50-50 around this floor. Instead, it 50-50 around the first floor back here and earlier in December on the 17th. It's like 2 days ago. I was like, not way earlier. It is earlier, but anywho, so that gives you a really simple Mr. Book's book. That's hilarious. That gives you a really simple... I'm not qualified to write a book. I think that's the other thing. I could write like a creative, and I don't want to actually... I shouldn't... Never mind. You guys are like, what? Tell me. You just started saying something. I shouldn't have said anything. I am writing like a novel, but I don't want to get into that. What? You're writing a novel? Why? I don't know. I did a career type book like a year ago. I went through the whole thing, and it's called "What Color Is Your Parachute?" And it's about if you want to change jobs, or you're looking for like a career shift, or you're just trying to pick a career to begin with, I would highly recommend it. The guy who wrote it, he is like a Christian dude. He has like a section in the back that he added to the book later to talk about maybe like faith-based type stuff. But you don't have to, if you don't like that, you don't have to read that. The book itself isn't like religious or anything. It's just about deciding how you want to be in the world and like what you're good at. And I didn't come up with a lot of answers that I thought were bad. I actually came up with some really good things. But one of the things that came up was not like when I say not good, I mean like they're not like super lucrative careers. You know, the things that I came up with personally, they're all kind of like in the middle. Like I probably should have been an architect. That's what I found out. Like I shouldn't have done. I like animation, but I probably would have been a lot happier if I had done landscape architecture. That's essentially what I came to a conclusion. Is like I would be probably the happiest doing landscape architecture. Like that would give me the most joy in life. And it's cool because it kind of teaches you about yourself. It's a good book. And you have to do the exercises in it, otherwise it's kind of pointless. It's a very popular book, so it's not like some of you may have heard of it before. But there was a couple other things that came up, and one of them was, there was like three or four things. One of them was kind of like a shift more laterally, which would be like taking something more in the design field that could also bring me joy. And I think landscape architecture was one of the best ones. It fit the best. When I started researching jobs, I was like, yeah, that kind of looks like the job that I probably would be the most happy with. The problem with landscape architecture is that you need a lot of school. A lot of people will have an actual architectural degree, but then there's also like, it's a 5-year program kind of thing. And then there's also like, so I may have some of the prereqs for it, but I'd have to go back to school for sure. And then you also have to learn about like earth science stuff, because landscape architect is not just building structures. They're also doing it with like the land in mind. So you have to learn about, you know, the science of erosion and foundational work and all that junk. So it's a lot. But anywho, so I like looked at that stuff and I was like, man, that'd be really cool. And then one of the other things that came up was being a lawyer. I talked to you guys about that before, and like what that would probably look like. Would again have to be more school, and I'm like, man, that's a lot. And then one of the things that I found that what would not really require any new schooling was writing. And writing is kind of weird because it's like, well, if you're a creative type, maybe you could do creative writing. It's not really a career for a lot of people though, because a lot of times it's like, you could write a billion books and just never go anywhere with it. But I do think that it was a good fit for me, at least on some level. All right, so AMC is trying to make a cross up right now over that trend we talked about at 410. I'm not sure why it's triggering multiple alerts. Maybe because it was on different time frames, different charts. Not sure. This is the daily. I want to keep this one as clean as possible. I don't want to muck it up. But yeah, isn't that weird? So I did think about it. I thought about, well, if I wrote something, I guess I could write about the market. But the problem with that is, like, if you don't have credentials, what are you really doing? Are you just trying to sell ideas? Are you trying to create something helpful? If you don't have it like 100% confirmed, how do you write a book about that, And at which point you're basically trying to become like Bulkowski, who did it. He's already done like so much research on, it's almost like a piggyback kind of thing where you're trying to like piggyback on other people who've already done the work. And sine wave theory is not unique to me. Like I really haven't read that much about it, to be very, very, very truthful. Like, I'm a big proponent of like self-discovery with things. It tends to stick in my brain better anyways. But like for the most part, like I've read a little bit about it here and there, but I feel like I'd probably be echoing what a lot of other people have already written. So it's just about a question of like, why would you do that? Do you want to? Is that something that you feel called to? Do you feel called to help people in the area of knowledge or of learning? Do you feel like that's your calling? Do you feel like you should be in service to other people, like in a physical way or like an emotional way? That's another kind of calling. Do you want to like beautify the world? Do you want to make things look better? There's all kinds of different things. So people that want to do financial planning, they want to help. They like to help people. They like math, probably, and yeah, and ultimately they enjoy seeing people succeed financially, which isn't not true of me. I don't know if it's something I want to do forever. So you guys are like, well, you're not like a spring chicken anymore, Booksy. Maybe you should do something. I know. But that's why I read that book, because my dad recommended it to me. And he was like, it's a good book for anybody. He's like, but it sounds like something you would benefit from. You're just kind of not sure what you want to do the rest of your life. I still like doing this, and I still like doing animation work. It's just not very lucrative. Unless I'm like actively trading, there's not much to this that I would call a career. Yeah. All right. Well, GME did break out, so it may just take back off. I'm going to look at one other thing here that I did not look at, which is the rising trend. So like bulls had lost this trend going up, so they're going back to check it right now. So I did say I thought it would just continue, but in reality, it may have been a little bit of an overstatement. It might be a little bit lower than that. That's the trend right there, not that original low. So I think I see it now. So there was a sign of weakness here, right there. So this was going there all along, which I guess I could have seen it earlier if I had looked closely, but I didn't look closely. So instead of using, I see. So this is where it went wrong. So when it pushed up on the 17th, it backed up to 3010. And then it immediately kind of came back and it pushed lower after making a new high, which is always a signpost of weakness to some degree. It may not be the worst case scenario, but if it pushes up and then it creates this like U shape and pushes up again, and look at the RSI has a really evident cat ear, cat paw kind of thing going on. It just looks really clear that that's what was going on. So they made a new low that generates a downtrend here, which is now where we are presently. The uptrend then would be like the opposition to that until the breakdown. And you got like a 50-50 move. So they wrapped around, they went a little higher maybe than was necessary in order to drive the price down low, and they pushed below that. This is a lot more in line with what I was thinking. This is like 28.9, so it's a little closer to like that 28.8 level that I said yesterday. So it's very, very possible that it gets kind of stuck in between here for now. There's a bit of a range here that's open. Now I'd be curious to see where that is in relationship to the previous top zone. And it looks like, yeah, right there at 29.30, there's a lot of trading that was happening. Yep, that's the mark. 29.30 was trading a lot as a top, and it looks like it goes back pretty far. I'd have to go, maybe there's another reason why 29.30 is being used, and I just missed it. It might be a smidge higher than that, but that looks about right. So this had been used as a top, so we jumped over it here, and just like back in November on the 29th, we're testing it. It doesn't exactly look strong because it dipped below, but if that liquidity test is enough, I would suggest to you that if it's enough and if it's bullish, this, no matter if it comes back really low or not, eventually this would have to come back above, so it could still fill that gap. This would have to come back above here and hold. It's been the sell-off point for a lot of this. Yeah, so given that setup, let's see how fast this goes. So there was an advancement presently. I think this is like dissecting the wave maybe a little too much, but I'm going to do that anyways. Why use that? Because that's a resistance support, attempted support. So when you look at the middle of the ears, as we call them, you should be looking at where was that dominant supply before it jumped. That's always a question. There's two lines because there's a support higher and then there's like a projection. So there's a bit of a wave gap there. You can see that. So I'm going to venture that that's a waveform center, and I don't know if there's a better way to kind of perfect that right this second, but so I'm just trying to clean this up. Yeah, so this should be like a wave out around it. And then the expectation would be that you'd have another wave out around it. It looks like it's slightly low. That's interesting. It's like a parallel to this one, but it's not pointing to the top. Okay, whatever. So we're just looking at that as like it's a wave anchor essentially. So this may represent like a distributive level, and this would represent like a buy-in level. Like that. Yeah, this is definitely pointing towards, in my opinion, yeah, it's kind of just doing, I think it's just doing a retrace back, trying to do a retrace back to this level at 2018, which makes sense, is where we took off from. So if I were structuring this, I would suggest to you that that's the overall, that's the direction. So I think that's done. Overall, that's the direction of movement here. Could be an ABC correction that's already done, in which case it just breaks out and goes. If we added like a fifth wave here, I don't know. Again, I don't know if it necessarily needs a fifth wave. I think it could probably do without. I mean, there's all kinds of Elliott wave stuff you could use. I feel like this could be used as a buy zone though, going forward, and then have it kind of break out above here. And this would give you a really solid, I believe this would be probably the best, descriptively, this would probably be the strongest bull setup that we could have right now. Because even though that might look a little bit like uneasy, like, oh, well, what if it then breaks again? Yeah, that's the same parallel, I think, or close to it. I think it's supposed to be the same. Again, channels being generated, yada, yada, yada. Yep, there should be the wave right there. So I think that with that in mind, I think this is probably the best case scenario for us right here. And I know you guys are like, well, why wouldn't it just be rocketing up to the moon? Guys, I don't care about rocketing. You know, like rocketing's easy. It's going up. If you're breaking out and consistently making upward breakouts with supports, it's all good. As long as you're making supports on the way out, I don't really care. You know, if it's when we don't make supports that's when we have problems. When we just break like this and we don't make a support on the way out, we have issues. Right? There's a likelihood you're going to come back and make that support. So as long as it kept coming up and like breaking out, like it could just continue. I'm not like anti-run or something. If it just goes, it goes. When we use the rotational symmetry on this, we talked about that target. I guess I deleted it, which was dumb. I said I wasn't going to do that. Why did I do that? I don't know. I think because it was using the orange and not the blue. I was like, I need to redo it or something. But there should have been like another upward motion. Man, I don't even know where it is now. So this was going to go up, back down, build out support, and then come up again. So I would suggest that if it takes the higher route, this downward portion would have to be like elevated. So if it ends up going back up and then breaking out towards the blue, it would look like this. Like you'd have to have like an elevated cross here. And then if it doesn't, I think it's pretty much exactly what we have down bottom. And instead it goes up to the orange, right? And it's just kind of like the same thing but lower. And I noted that after the first two moves here, it just the rotations were there, but they're not looking at least for now, it didn't seem like they were looking at the blue. They were looking at this orange. So two alternative maybe routes there with a similar wave pattern would make sense. So I would suggest, though, that this is still better because we have the gap and we would definitely make support right on top of that creek instead of going through it. It gives you the wave. So like when a wave, when a wave loves a woman. No, when a wave, where the hell did that come from, Booksy? I don't know. When a wave, when two waves love each other, when the wave kind of, if it can manage to find the center point of a wave, which is not always easy, when it hits the center and rejects, whether it's on the bottom or the top of that, it's usually a good indication that you're about to break out. This is something that is harder to, it's easier to say than to do. It's harder to do, right, than to say it. So like I have seen that many times, but finding the middle of the wave is often very challenging. I think it's very similar to pitchforks. So like the way that people trade the pitchfork in terms of like supports and rejections, I think it's pretty similar. Because pitchforks really do look at the whole as it's like a projection. You're projecting a channel outward, right? But in theory, like doing that isn't always really easy. You can see the way I kind of clumsily did it. And you might say, well, why don't you just use like the pitchfork tool? I don't know. I guess I just don't think about it. Now that I'm saying it, I'm like, maybe I should just use the pitchfork tool. I don't really know how to use it very well. There. Something like that. I think even in that, it's like, doesn't like look quite the same as what I did. So then it's like, well, are you just off, or is the pitchfork off, or I don't know. It would look exactly the same if it went backwards in the same angle. It's pretty much exactly what I would have imagined right there. But how would you have done that? I don't know. I guess you could use this point of contact instead of the top. I thought you were supposed to use like the peak. Yeah, I don't know. Same concept though. Does books have autism? Ah. Well, I think everybody's on the spectrum. That's what they say. It's not really like a diagnosis that I've ever gotten. But like technically, yeah, I think everybody's on the spectrum somewhere. Some people just have more. It's the idea of like of autism in like the broader sense is that they call it neural divergence or something, or like neurodiversity or something like that nowadays, because they're like, well, really what they found is that everybody's got slightly different ways of processing information, and some people it tends to be like this, right, and it ends up being this very obvious kind of outward expression of that, where you can see it in the way that people are either able or not able to process certain things as quickly, and they do it in a different way. I shouldn't say as quickly. So the stereotypes of like, oh, they don't, like autistic people don't read emotions very well. Well, that's sometimes true, but it's like a learned behavior for a lot of them, and then for folks that are like that. And then there's other people that are like autism, or they called it, there was another word, Asperger's or whatever, where it's not really like that severe. Do I think that I'm autistic? Probably. Like if you were to meet me, you may not think I am, but if you spend enough time with me, you'd probably say I was. But I've never been diagnosed, and I don't think it's wise to self-diagnose, so I would just say maybe. I'm manic, if that's something you want to know. Oh no! It sounds horrible, but bipolar is a real thing, and it affects a lot of people. And I'm definitely in that group. That is a diagnosis that I've gently received at different times. So that can sometimes be a little bit like both. So it seems like some people are like, oh, you got some kind of, like my wife lived with me for a really long time. She thinks that I'm autistic or something. But the reason that she thinks that is because I fixate on things and I get really into things for a while and I can't let it go. It's like a bad habit. Good thing and a bad thing depending on what I'm doing. but it's also a problem because it can lead you to make really irrational decisions that don't make any sense. And you could do things that are based on certain impulses or inclinations that are not healthy. And yeah, I mean, it's gotten me into trouble for sure over my lifetime, different instances. But I think that could be a little bit confusing because like that's also a sign of people who are bipolar, and a lot of people think that bipolar depression is like one of the worst because the idea of mania or manic depression is tied to that, and there are people who have like schizophrenic personalities and stuff, and they're first diagnosed bipolar, and then they're bipolar schizophrenic, and so on and so forth. I don't see or hear people talk to me. It's not like that. I do sometimes feel a disassociation with myself. So sometimes I'll be like really outside myself. And then I do fixate quite a bit. And then I have pretty nasty, I say nasty, but I can have mood swings is like not the right way to put it. It sounds like mood swings sounds like you're talking about menstruation or something like like, oh, he's just moody. It's not really like that. It's like a chemical thing, or it just like swings really hard. So it's not so much like moody as it is like a proneness to certain behaviors that your brain is thinking something is normal and it's not. So when I'm on here and I sound like I have really low energy, sometimes, not always, sometimes it's because I'm swinging the one way. And then sometimes when I'm on here and I have like super high energy and I'm like all bubbly and like woo, chipper, maybe is a better word. Sometimes, not always, it's because I'm in that swing to the other side. So again, it's kind of a both. Like on the one hand, it enables me to like sit here and look at a chart for 3 years and not really get tired of it, which is a pretty unique thing to do. On the other hand, it would make sense for me if somebody said they didn't trust me, like because of that. They would be like, well, I'm not sure if I could trust you if you're bound to this weird like back and forth. Well, I manage it. Obviously it's not something that I'm going to be like coming out and talking about every single day on here. I manage it, and it's something that I live with. I'm still just a person, and I still have to take responsibility for my words and my choices. It's not like I can just blame something else. So there's obviously implications to it, but so on the one hand, it's good because I can sit here and chart something and find it relatively interesting and intriguing for 3 years, which is kind of crazy. Where a lot of people are like, I'm done with this crap, I'm like, well, I don't know, just keep doing it. But on the other hand, I'm sitting here charting this for 3 years, and it's like, maybe this isn't what I need to be doing, maybe. So those are things that come up in my like regular thought pattern pretty regularly. Like, do I think it's an unhealthy obsession or fixation? Probably a little bit of a fixation. Do I think that it could be good in the end? Yes. Is it wrong to pursue things that you enjoy that could be good and be good for you and your family in the end? No. So like not every fixation has to be like an evil thing, That's real talk with me if you want to know really. But no, like looking back, would I have said that as a younger person? Probably not. I was told that I was stubborn and overly sensitive growing up. So like I was constantly in an environment that did not reinforce positives about this brain of mine, but rather said that it was bad. And it's not about being a snowflake or something. A lot of people get really like, oh, well, you want everyone to treat you different. No, no, no. I just want people to treat me like I am, which is I'm not the same as you. So let me just be what I am. You know, if I had a better environment, would that have changed things in my life? Maybe. I don't think that it's the same for everybody, and I don't want to make it sound like some whitewashed kind of thing, like, oh, it's gonna everybody if you just had this. But it does cause problems when you're basically raised to think that the way that you feel and think about things in terms of like just everyday decisions. It's not like anything particularly dramatic, you know, but the way that you process things is just wrong. Well, maybe, there are definitely thinking errors, and I've found that I think a lot of thinking errors, but a lot of those thinking errors actually come from me trying to find outlets for things instead of actually dealing with, hey, this is the way that your mind is. You need to take care of it, and you need to recognize the good and the bad when you think about things. The good stuff is there. The bad stuff is there. Then it's just a different time. People have changed a lot. And society in general, I think, has always had a little bit of difficulty with things like depression and stuff. It's nothing new. People think it's like all brand new or something. Like, we didn't know people were depressed back in the day, but we found out later they're depressed. No, we knew. Like, people have known about psychological conditions for a long time. There's a lot of, they just didn't know maybe how to help all the time. But there's a lot of people out there that think that, some people still think it's like pseudoscience or something. It's just an excuse for people to be weird. I think about it as like a helpmate. Like, if you're having trouble, it really doesn't matter if it's pseudoscience or not. If it's like a real problem for you, then it's a real problem. So maybe at some point it becomes not a real problem, Maybe at some point you look back and you're like, that really wasn't an issue. And now I think about it differently. But at the time, if it's a problem, it's a problem. Like, go get some help, Figure it out. Who cares if other people think it's not real? Just deal with it and then decide for yourself later. There's definitely some things that, with my mental health, that I was like, this is a problem. And then later I'm like, meh, that really wasn't a problem. The problem was the way I was thinking about it. And I made really bad decisions. And a lot of it was just thinking errors and stuff. And you're like, well, there you go. So in the end, do I think I'm going to be doing this forever? I don't know. I don't think so. But how would I go about transitioning to a different career? What would that look like in terms of this whole like AMC saga thing? I don't know. Maybe one day I just need to like hang it up and just go a different direction. I think that's okay. I would not be particularly upset by that as long as I'm doing something else that's fulfilling. But I gotta be straightforward with you. At least for now, I'm not really seeing like a need to sort of stop doing AMC stuff. At least for this moment, I really want to see through the next moves. If we go down or up, doesn't really matter. I feel like this was the beginning for me of the transition, and so when I look back at this, I really think that this is kind of going to be like the pinnacle time, in my opinion, for a lot of AMC folk. And if I'm wrong, then maybe then I'll be like reluctant and say, okay, I guess I'm just done. But for now, I really do feel like this is the moments where things could really turn around for a lot of people. And at the end of the day, like, that's a good time to be like, all right, this is enough of this, Frankly, from just my personal perspective on this, if this ever hits like $20, I'm pretty much break even. I'm not in a bad spot. You might say, well, why are you break even? Why didn't you get out here? I just didn't, And the ape thing really messed with me. and I just decided that now I'm just going to stick with it. Long term, I see potential for upside, so I'm not particularly bearish long term. If it gets to 80 to 90, then yeah, I'm I'm not uncomfortable saying that to you. You know, I don't think that that decision belongs in anyone's hands but the person who's clicking the trade button. So if you're like, I'm all libertarian when it comes to when it comes to trading, like you should do what you want to do with your money, and that's it. Like that's the end of the story, you know. And I don't think there's anything else to say. Like I don't think anybody can tell you that you should or shouldn't do something with your finances. I think that there's wisdom in listening to counsel about whether you should or shouldn't invest in certain things or that kind of business. You know, a financial advisor could help you with that. But like that wisdom still leads to your decision. So for me, I'm not uncomfortable saying that if it got to like 80 or 90 bucks, I think I'm done. I don't think I would trade AMC again. I thought about it for a long time, and at first, when we first started all this back in like 2022, I thought about how if I could learn how to trade AMC effectively, then why not just trade AMC forever? You know, if you're really good at doing one thing, you could just do that one thing. But the problem is that the stock market it doesn't really favor that, right? It doesn't, unless you're doing like an ETF or something, right? Which is kind of a broader summation of the whole market moving. It doesn't really favor that with individual stocks, especially if they're like smaller companies, because they can take a beating for a long time. And like we've talked about, there wasn't that many trade opportunities. If you had taken just the upside 1, 2, 3, 4, maybe 5, 6, there's only like 6 good at trading opportunities, big term here, just to the upside over the last 3 years, 4 years. That's not very much. You know, you'd have to just trade those with a lot of conviction, and maybe you could have made a lot of money. But otherwise, like I think this would have been a difficult stock to trade from a bull's perspective. There's just not much here, except for these reactive moves. So that's a dangerous place to be. If you're just saying like, well, I just want to trade one stock. Well, why would you do like this? I mean, just being realistic, it doesn't make sense. So for me, it's not really a question of like if, it's more about when. And I think at some point, I think there will be a time where I'm just going to be like, I think that's it. And I don't think I'm going to invest in AMC. And you might say that's stupid. You'd be like, well, if it's at 90, it's just going to keep going. No, I don't care. Don't care. Like at this point, I don't care. I need to do what I need to do for that, you know, whatever's best for my family. So if I got up here and did not get out and end up losing it again and being stuck in it again, I don't need that. And frankly, when you got like people that rely on you, you know, for making a living or whatever, that choice is not just your own. Like there's a responsibility with that choice to make the most of every situation so that your family can have a good future. I think that when some people say they're going to hodl forever, a lot of them, not all of them, okay, a lot of them are younger people. Not all of them, okay? I know there's plenty of older people that are hodling for good reason. They're hodling because of 2008, because of market corruption, things like that. But then I hear on the flip side of that I hear the same amount of noise on the flip side of that, which is the hodl crowd that makes raps about AMC and wants Lamborghinis. And I don't think that they're really interested as much in the bigger cause as they are just kind of wanting to make money, which is the love of money is, you know, obviously a sense of greed. But do I think they're all greedy? No. I just think that the idea is like, hey, there's some people in this trade that are going to say those things because they just really want to make a lot of money really fast and not have to work again. There's other people who say those things because they genuinely want market transparency. They want to see justice done. That's a different crowd. Do I think that Roaring Kitty, like when I kind of learned about him and read through his stuff, it really didn't seem to me that, and I don't know the guy. I can't tell you like his thoughts on it. He's obviously able to speak for himself. Um, but it seems to me that like his early ideas about AMC, not even AMC, about GME, his early ideas, that maybe the precursor to his later manifestos or whatever, that people have attributed to him. I feel like he wasn't really out to get the man necessarily. I think the man was just kind of there and he used it in his language sometimes. But if you really look at what he was doing, it was a investment based on certain principles, and like he saw GameStop as a really good investment where others did not. He was just a contrarian. Like he was trading against the trend. He had high conviction in it. He saw the squeeze potential, but he also was really looking at the potential of the company. And the whole like I like the stock thing, it kind of took on its own meaning later. When people say I like the stock, it's kind of tied to this like stick it to the man thing. When I don't know, maybe he meant it that way, maybe he didn't, but at the end of the day, like his investment was based on what he thought was sound research, and he was aware of how, from a technical perspective, how this could be a bad thing for certain institutions that get stuck in the play, that buying and holding would cause an issue, right? If nobody's selling. I think that knowing that he worked for like a fund and all that stuff, it's an opinion about somebody's opinion, right? So you take it with a grain of salt. My opinion about his opinions, I cannot speak for him, you know. But for me, it's like, it seemed like that second community came along and really kind of took his words and turned them into what they wanted. And that's often the case, you know, with a lot of leaders. But like, there's this idea of like, he was doing something that a lot of people wanted to get behind. They got behind him. Now it's 3 years later. We're in a different market environment. It's a bullish market environment again. There's bullish possibility again for AMC and GME. Higher than ever, you know, since the first run up. I'm just not going to fall into the same trappings that I did last time and assume that every up is just going to keep going up. That's just not the case. So, you think 50 is very possible? Yeah. For AMC, yeah. For GME, yeah. Do I think 50 on GME is very possible for GME? I think it's a bit of a mixed bag, because I didn't have targets at first, and even now I'm like, does it have to get there? I don't think so. I think 43 is really the level that would be contested, but what usually happens is that we end up passing through that and then coming back down. So it would be like a flush kind of thing. Do I think it's likely, based on the past and where this supply zone is from 45 to 50, that it dips into that? Yeah. But I would say that it does so in order to sell high. And that's going to be, again, a slap in the face for some. It doesn't matter if it's successful or not. What I'm saying is that I think that a lot of traders, a lot of institutions will be selling from 45 to 50 if it hits there. It may very well hold it and then break out and go way farther. But I'm just basing it on what we've seen from the supply zones in the last 3.5 years. That's a really hot supply zone. Huge deal, supply zone, especially above 43. So for us at this point, the assumption should be that the FOMO that goes on from like 43 to say 50, if that happens, would probably be, if it's on really high volume, would probably be a lot of selling into, you know, which is distribution, which is this idea of like strong hands to weak hands. They're distributing their shares while people are buying in, thinking it's going to go to the moon. Even if it does, it doesn't negate the fact that that would probably happen here. Does that make sense? Like, so even if you're going to go to the moon, your decision whether you buy or sell or hold or whatever, that should be taken with the consideration of like a neutral assessment of this area, which is that it is a supply zone until it isn't. So, do I think 50 is very possible for GME? Yeah, but I don't know what to say except that I think that the region from like 39 to 43 is like really the meat. And then the rest of this is kind of like bonus for me. And then if it does hold, then it's really a big deal. But that's as far as I would expect it to go for now. In theory, if you're just looking at channels, then it could be done, you know, and I don't want to make it sound bad or anything like that. But it's similar to what we're seeing on AMC, where you're kind of at, with AMC, it's at the shift. We've talked about that. Like it's really right there. You know, it's on that verge of like breaking out and really heading up towards the top, which is frankly pretty high. It's really right there. It's right on the edge. And GME is no different. It is in its channel structure already at the edge. Like I've talked about these channels a little bit here and there. They're not really arbitrary. They're based on this original downtrend, I believe, is where I got it from, the first one when we started walking down on these cat ears. They've been highly relevant. They turned into the creek. That was a channel down right here. And then from that point forward, they've been used, and I took the supplies drops from May and June, and I dropped the parallels where I thought they were, and they've been used. Like, that's where the supply zones were, right here and here back in May and June, and then you ended up hitting those and having to break out, and they become what I would call like a triangulation of like where you're going to go, you know. So if you're looking at just that, not extended hours, then you would say right now that what we just did, I mean, it literally hit it twice, like perfectly, like wick to it twice. It was, we just tried to breach it and failed, and that we're backing up away from it. If we jump that and you didn't have extended trading hours, you would say, and I would say, that it's basically out. And if this were anything else, and I hadn't done what I've already done to try to analyze it, and it was just kind of by itself, you know, on its own, I would suggest to you that if it breaks out right there, it'd probably go all the way back up to near the top. And who's to say it won't? Like, it might end up going all the way back up, you know? And this is interesting because even though I'm not like the most super bullish on GME at times, I've talked a lot about potential to come down. Really all I'm doing is I'm just identifying like, well, there's technically like creeks that end up down here in the pits way later, like years later, you know, that would indicate that you could come back down. And then the other indications were based on, well, if we do a phase B top and we need to come back down to the floor, then you'd have a flush, right? That's still possible. But what's also possible, given what we know about AMC right now, is I could just be wrong. Like this may actually squeeze. And if it does, it will hold 45 to 50 and it will push. More than likely, and this is where things get kind of spicy, I suppose. More than likely, it would come back to meet the wave cross. The wave cross is really high on this. So this is a little tricky because my chart's a bit messy, but I'll try to do it anyways. Just because, yeah, I don't really know where I'd place it, to be honest. I think I should do it from here. Not the big one, but from here down to here. Yes, that looks more accurate. That's pretty close. So the 50% marker, hard to see it on my screen, but it's like right there. We're right at it right now. So that would be essentially like a very important retracement level right there. But then it also indicates a trajectory middle potential for a wave. This is a really extreme kind of example. And I'd have to also make sure I pick the right middle. I want to say you do this one, not the very bottom of the move. I know it's a little more conservative, but this is the way that I think I would do it if I were trying to be as non-biased as I could. Yeah, the suggestion here would be that you could go back up to like near 80 $80 pretty quick. So, which is above the top, at least in regular trading hours. Interestingly, in extended trading hours, it went up to like 81, which is really close to where this triangulates to later right now. If you look at where we go, if we go as the crow flies from now till, let's say, January 16th or something, or January 9th, it's basically right where it was in extended trading hours, right there. So I think that's equivalent to us on AMC running to like 20 would be this breaking out and going up, because both of them would be adhering to their wave structures pretty accurately. So why do you then have to be so conservative about it, Booksy? I don't have to be anything. I choose to be a bit conservative because I know that if we expect huge things and they don't happen, then you end up being really disappointed, and a lot of times you get screwed. You just don't take the money that you have. That's good. If you have an idea that, yeah, it could do that, but this is a safer area to understand, like this is where there could be a supply drop, you're not caught off guard, you know. And to my credit, I guess you could say that, yeah, that this wave does tend to hit, but at the same time, to critique Booksy's, you know, methodology here, really like the top that you're measuring to is 47. So again, like, even though, yes, it's true that this does often hit this high, it has to first cross this region anyways. So it has to make the SOS. Regardless of your personal feelings about whether the methodology is good or not, it doesn't make any difference. You wouldn't buy it unless it makes this SOS right here, which is exactly what I'm saying. Like, that's the extension zone for GME. Does this make sense as an extension zone? Well, this is where things become, again, kind of interesting, because when we go back and we look at this wave, the breakdown for GME is really different than AMC. It does not have a lot of the same markings. It's similar, but it's not like exactly the same. And I find it to be kind of interesting for other reasons, but I want to just go with this route. There's a S-curve right here. And another way to do projections is to look at projections through the middle of the S-curve and to see where those are. So what I would do is I would take the S-curve, which is back in this region. I'm actually going to fill this in a bit. Hopefully you can see it a little bit better. I know it's messy, but this way at least you have it filled in. So there's projections here that I could use as well. So I would go through like the middle of the S-curve and use that as a projection, and then potentially, if you really want to like dig into it and see if you can find like a really solid one, you can look at then the trajectories as opposed to just doing a middle of the S-curve kind of thing, because this cuts through the middle, but it doesn't really adhere to many of the trajectories as far as I can tell. So if I really wanted to like hammer in on it, and I believe this, all this is it's just like we were talking about before. It's basically like to some ways like a sideways version of doing like a projection with like a pitchfork or something, right? But you're using the waveforms to do it instead of certain angles. So if we make this like as precise as possible, you know, it doesn't look that bad. It's pretty close. I think what it looks like to me is here there was you can see the breakdown right here. There was a bit of a wave movement, but then it didn't really use it. This is actually better. I like this one better. So it's slightly below. That's interesting. Like all of these are like kind of missing it. That's the one I would use. Even though it's not right through the middle, it's like close enough, kind of a cross section of this and this wave up, this wave down. And then ultimately, like this is where it kind of breaks down anyways to the second half, because this is the 50% mark at 23. That hook is the last point of contact before it moves to the second half. So I'd probably use that. I mean, there's others you could pick. We could use that projection as well, and that could help us determine potentially where this might intersect like an SOS or something. The crazy thing again about this is that it won't look right until it happens, right? And then you're going to be like, oh, well, that was really fast, right? So this is really close to where you would expect there to be an SOS. Well, how do you know when it's going to hit there? You don't really. But if I just looked at the zone, it's from December 20th right here until, again, maybe like January, early January. This is pretty darn close to what we saw on AMC, which was the 30th for an SOS. I made a couple different points about that, but the idea was like you would probably get to $6 before the 30th, which again sounds crazy because you're like, that's 10 days away. It ain't gonna happen. It's happened before, you know, like AMC's made stupid huge moves like really fast, really abruptly. It just has to make the right short-term moves. So for me, I'm not looking at a definite SOS with further upside, but I'll say that from where we stand, this has a pretty succinct S-curve already from the breakout all the way up to that point. So there's an already existing S-curve here from like where it broke out to roughly where we think it finds its roost near the top. Debatable as to where that is exactly, I suppose. You know, where exactly is the middle? Who knows? Maybe it's this number that we're talking about today, this kind of oddball number in here of like 29.30. That would get you to like over 40 anyways. And that's the first estimation, this point right here. That works beautifully with the rotational symmetry because this was all based, these white lines right here that are at the top near 40 are all based on the rotational symmetry coming back to November 4th. So I know it's got enough gumption to get there. From that point, I think that's where the debate in my mind is. It's not really about, will it run up there? I'm like, yeah, probably will. This to me is a very strong possibility. If it then moves up further to an SOS, I think we're going to have a really good conversation at that point about whether we think it's going to continue. And it might, you know, and if it rallies, guys, if it rallies to $80 by January, like I'm going to be sitting pretty happy because I've got some long-term, not even longer term, I've got some January ones still. I got some big ones. You guys are like, what? Yeah, I've got all my shares from GME. I also have January 17th contracts for way up there. Why, if you only think it's going to go up 50, would you buy contracts for way up there? Because back near the bottom, when I bought those, I was like thinking about how, and by the way, you might think that I'm like doing really well as a result. That's not true because these took a really long time to cool off. But back in the day when I got them, I had already done some estimations like this in the past. So I'd already done like a cross section that was like we could be up here by January and then beyond. And there was a few times where I did some streams like that where I talked about massive upside and what that would look like. Most of the last 5 months have been me kind of walking that backwards as I dissect my own view. So like instead of just assuming that it's going to do that, playing devil's advocate to the idea that it goes up here, I watched instead like lower target, lower target, lower target. These are the targets that I'm looking at now with scrutiny to say like, hey, if it doesn't go that way, there's another setup looming, and that other setup is absolutely designed to get you back low. So it would be folly to ignore it. And I'm not of the opinion that I should just sit here and assume that it's going to get there, right? I think that's unwise on my part. And it doesn't help you either. If I said, oh, I think it gets to $80 by January, you guys would be like, cool, well, prove it. And then I could show you that one thing, and then we could just let it go. But it would be, I think, doing you guys a discredit and myself to just not examine that and scrutinize it and to pick it apart. That's the point of analysis, right? It's to judge your own bias, essentially, and make sure that you're not just making stuff up, you know? What is the thesis behind a move to 80, considering all the dilution and reverse split? Just the chart? Well, the chart's been set up that way for a long time. If I just said that because of this and this and this, that's never going to happen, that's me saying that the chart's had a change of character. Nothing here has happened, and this is going to sound really silly. I'm going to sound like Emperor Palpatine for a second. Nothing has happened that I have not foreseen. Nothing has happened here that wasn't foreseeable. So I haven't seen any change of character. Period. So in order for me to say, like, this is not going to do those things, I would have to see something here that makes me think it's not going to do those things. Thus far, even in the drop down, like, this setup by itself doesn't mean it's not going to go back up. I've already had a long-standing relationship with this chart pattern, and I've talked about it a lot in terms of the overall setup because it's in there repeatedly. Like, it's in there dozens of times. I think it's the main behavioral pattern for AMC, and it's the wave. It's just a Wyckoffean wave that either catches low or doesn't catch low. It doesn't really matter. But that's the pattern right here. Okay. And this has been the same chart that I've used for the last like 2 years to talk about what I think is going to happen on the big picture. Did it frustrate me to see this drop as far as it did? Yeah. But if Stockfather was here, he would say the same thing. He would say that, yes, Booksy has talked about this for a while because we had a long conversation, he and I, about big picture stuff. And what I thought was going to happen was that we were waving up to come down and test near the floor. We either get to the floor, which would be like a spring, or like a second bottom. We don't know if it's necessarily a spring. Could be a bottom before another upthrust. We don't know. The point is we would come back down as low as we could to test the creek and the floor. And then we either make an LPS where it's the last point of support where it doesn't ever come down as low, or we make maybe a spring bottom and we dip below the bottom in order to check liquidity down where we started. When you look at it that way, this doesn't really look bad at all because it just looks like every other chart that's traded on AMC. And I know you guys are like, well, it's just a chart. That's not a good reason. I disagree. I disagree. I'm just going to go ahead and say that. Like, we're not going to see eye to eye if you just don't like believe that charting works. Then I don't have anything else to say. Like, I've seen it enough at this point to know that this pattern has some really simple markers that tend to play out. It's not a complicated chart pattern. It seems complicated. It's really just oopsie, gold. Finally had its breakout, huh? Maybe. Looked at that like a couple years ago. This is a giant cup and handle or something. But I have to go look at it again. So I would look at this and suggest to you that it hasn't done anything just yet that's made me think that it's not going to play into that same pattern. And especially given that I've just done the chart shift analysis, like, it's still there. It's right where it could have. I think it would have been more logical had it stayed where it was, obviously, but it doesn't change the fact that it's the same chart pattern that's existed for years. So if I thought that this had suddenly had a change of character, then I would be like, yeah, sure, it's not going to happen. But if the operators are still doing what they're doing and accumulating shares, and we have a huge amount of operators invested down here, then I would be very surprised, I guess you could say, if it went the other way. Like, if it just suddenly went the other direction, I'd be like, well, I have no idea why I did that. you know. I think this was an S-curve down to get you to a low. It makes sense when you put the chart shift on. It's exactly where it should have been. It dipped below the previous bottom. Instead of hitting like 290s, it hit like 150s, right, in terms of value. And then it reacts back up and it's chopping across the floor. It's pretty much like what you would expect in any like setup like this where you have a reaction off of an S-curve and then it comes back down to check the floor. Like there's nothing unique about it in that regard. It's not like a special chart where it's somehow like, oh, it's doing something so different. No, like I just demonstrated to you that this actually did do the right reaction here. Like off the drop, it did the same reaction. So why would I then look at this and say that it's not doing what I would expect it to do if it's doing what I expect it to do? It doesn't make any sense. So why would I throw it out just because of dilution? When Adam Aaron diluted back here, the stock then ran to like the 70s. What was the fundamental reason for that? What was the real catalyst for that? You'd say, well, it was the movement, you know? Okay. But really, like, think about it. I know that people are going to say it was a short squeeze and all that stuff. Say whatever you want to say, man. You can say it was a short squeeze, but it's still a technical target. Like, this was still baked into the reaction here from the breakdown. Like, it's still a waveform target. It never deviated from that. You know? There's no there's no deviation. It's all right there. Like, it had this target in mind years in advance. Whether or not a short squeeze helped get it there, like, I don't really care, you know? I mean, it doesn't really matter to me at this point, but it's there. You know, these are waveforms that developed that are bullish, that are pointing towards the top. As this thing was dropping, bulls were trying to go back towards 72, which is roughly like a double value of the original. It's 100% markup from the original top, which was like 35 or something, you know? It's a slingshot. It pushed down away from there in order to build back up. It does like a 50-50 around this directive wave down. It's exactly like what you'd expect with everything else. When I look at this big picture and then I go and I look closely at what we see in, I don't know, like anything really. Go look at what happened right here in 2021 in that little bottom. I mean, it's such a small little thing, but it's no different than like the macro picture. It's going to look silly on the, it's going to look kind of silly on this, this scale, but I'll do it anyways. But like, I would love for someone to tell me behavior wise, I can't do it. I can't do it. It's not going to work. It's the same like structurally is what I'm trying to say. Like it's a wave down that then breaks back up and then it flattens out in the middle and drops down again. It's like exactly the same structure wise. It's not going to work unless I get like a micro and then pull it out and all that junk. So what it becomes is just a question of like, is this changing character? If the answer is no, and you have developed a top here, just like you developed a top here, right? And then that top drives the price down into a bottom that then reacts strongly, right? And you do a wave cross, like this motion into that bottom with the reaction that's really strong that then bleeds down like across the bottom. That is the same motion that we see on like the macro scale here. It's iterative, meaning that the behavior of the operators, the thing that people call like the algo or something, is really just a waveform movement. And this is just a macro version of like that same waveform movement. It's just happening like on a huge scale. So this is no different in that regard than this guy. It's just that this is really small. And it's like getting to see inside like the patterning that's most commonly used. Whether or not it's going to happen fulfill like completely, you just have to rely then on your analysis to understand it. But that motion right here is essentially the exact same motion. And when you realize that really what we're doing is we're just kind of creating like a shelf, and then we're doing that here as well, and then we're driving beneath the shelf and coming back above it. And once we get back above it, we break out, so on and so forth. That's the pattern of behavior with wave analysis anyways. So it's the same thing as doing like the ups and downs on a wave in a channel. It's no different. So if I look at this and I'm like, yeah, if it breaks here, it's going back to the top. That's not complicated. That's really simple. There's a wave breakout here. There's a wave breakout here. There's a clear pattern that would indicate that an M cross here would get you above there. It's the most typical way this happens. Then you can debate whether or not it actually goes up high or low. And that's where we talk about projection, right? Because these were projected to go high when the wave came back up. Maybe in some alternate universe, it didn't break out here, but it still was projected. It's still a 50-50 move in a wave down. It's built out, you know. And it was before COVID, you know, it was before we really knew that the world was going to go on halt for a while. And maybe there was people that knew. I don't really care. The point is like the way you determine that is often based on like these kinds of things. You go back and you look at where did this land when it came back down. It's based on creek analysis. And then where did it go when it took off? It's based on trajectory analysis. The same thing applied here. Like, where did it go when it broke down? Well, it went to the creek. That's not complicated. It's really simple. Where did it go when it broke out? Trajectory. Where were the bulls trying to go before they got sort of stopped? Now, one of these led to a higher high. One of them led to a lower high. One of them, both of them don't break out, but one of them ultimately leads to a position of strength that leads you higher after this long wave. But it's just a wave. And there's other ways we could have looked at this. We could have looked at the previous wave. This would have also given us a really good accurate representation. You could have triangulated those two and basically hit this on the button. That's very likely where it's going. They're not, you know, for as much as people give, and they are given a lot of credit for being deceptive, and they are deceptive at times, meaning institutional trades can be very, very hard to read and understand the movement. This is not that deceptive. Like, it's pretty straightforward. And it triangulates really simply, you know? It's really straightforward. The ability to trade from the bottom to the top just requires a little bit of conviction that this is probably going to happen. The same thing applied back here. It's just a bigger scale, you know? But the issue with this one is that it had already hit the top here. It already made the check here. And then ultimately it had a bigger creek that would have to jump in order to get back here. If this had gone up to that target, it would have been outside the major creek. If this had broken out up here and gone up, it would have been way outside the big creek coming down. So they rejected it early to stop the movement. But the waveform analysis itself isn't particularly very interesting. Like, it's fairly straightforward. You know, that the wave came back up where it did, that's determined by other things. And I've done a lot of different work on why I think it went to where it went. Like, why did it only go like this distance when it came down? Like, there's other little things at play when you look at this that are really interesting in terms of the wave analysis. But at the end of the day, like, it didn't really do anything unexpected. It still came up to this mark. You still got the trade. My problem was not that I got this part wrong. My problem was that I got the next part wrong, thinking it was going to definitely go up higher. And you learn those lessons, right? You compare it to itself is what you should be doing, and not compare it to everything else that comes before. So you can look at this and say, yes, there is a pattern of trading that this tends to follow. It usually follows through pretty well. There's some rules that are almost always met, which is that during this like distributive phase, if the market is favorable, that you're probably going to get an equal part reaction that does eventually push you back up to some target in the future. But this clearly couldn't have been just a retail short squeeze driven thing. Like, it's obvious that there's some kind of stop. This is not the buy button removal either, right, for AMC. This is a secondary reaction after it jumped the creek. So when I looked at the shift, I just took that shift for face value. Like, if they had originally thought that this was going to do something similar, it could have looked pretty much the same. Maybe this would have been a little bit higher, not at like $4 or whatever it was, but maybe it was at $5. But overall, like, the chart itself still works. It's not gone. The setup is still there. This S curve that came down, this was the argument I was talking about the other day. Like, it didn't stop. There's nothing about this that's particularly unusual. Like, it's just an S curve down. It's just doing exactly what we do every time. And then you would look at that and suggest that then it's very possible, based on that there's a projection here. There's a midpoint. Look at where it is. Look at where the 50% is. Tell me I'm wrong, right? That the chart isn't still playing out. It's right there. It's right where we draw from at 45. That's essentially like a retracement of half of the S curve. Okay, so what, Booksy? Well, projection time, right? We just did this on GME. I'm not saying it's perfect. Maybe there's some better trends here, but this would be a very logical place to go then and suggest that, yeah, it's possible that this is going to break out later. And even when it does, that it could be going to some value up here. This is exactly what we did on the big picture chart the other day. And what we determined was that the only major problem with this, and it is a problem, and this is the important part of this problem, the major issue with this is that if you use the same trajectory, you're assuming that this actually stopped without a shift. So the main issue is that this value cannot be the right value anymore. Like, it just can't be. And what we found was that it was essentially like coming back to that same level over here, potentially by summer, right? June or whatever, 2025, which would imply that you could have a January and a June move. The issue with this is that is true, but only before what? Before the split. Now you have a shift. You cannot ignore the shift. It's not possible. So if you ignore the shift, you would assume that this could go up really far, really fast. But in reality, you can't ignore the shift. You could. I guess you could just ignore it. That's your choice. You have to take this into consideration. And you have to take that shift into consideration. So I just shifted it down, and that's where it ends up. Oh, but that's just speculation, Booksy. It's not actually setting up that way. Again, if it had changed character, I would have agreed with you. But the trajectory in and the trajectory out are matching the trajectory in, trajectory out method that was used in 2020. It's no different. This is the targeted range back in 2020 right here. It's right off of the top. It's not 72. It was like 61 or something like that. It ends up going higher than that, but that's ultimately like the projection. This is where we dropped from right before the split. They dropped it down a percentage. They created a gap. Then they went down further. Then they dropped it again on a gap for the split. That split replicates the same. It's essentially the shift value from this split to this split. It's not exact, but it's close. Meaning, like, I don't know if I could prove 100% is exact. I didn't go about doing that. I did it a little bit differently and got 226.36 or something like that. So there was a shift of 226%.36 or something like that. That shift is, I believe, the right one. and it's proved by a lot of other things, but I don't want to go into that right this second. I've already done it. But I think that this particular hit right here is a big deal. The fact that we hit on this weird number, that everyone talked about, and that he distributed where he did those shares, which is right around the original like high liquidity point. This is where all the people bought in 2021. That's where he's putting those shares out. And he also did, if I'm not mistaken, a offering back in December of 2020 or something like that. And then it ran afterwards, Do I think that this is possibly the same? Yes, but I think that you have to then shift the values down because the chart was shifted down, period. It's not about, because right now this is representing like the accurate value that they want it to represent. But in reality, like this kind of weird mystical world, this is the actual valuation comparison. This is where I lost a lot of people when I was trying to explain it. So I'm not going to go through that again. Like, sorry, not sorry. I don't have time to go through it again. It changes things. It does mean that, yeah, you could still see a drop to 2s to fill a gap and try to get this support here. That's not out of the question. The bear side is still there. It does have the sense of like continuity too. We talked about this previously. When they did the shift value, they clearly, whoever decides these things, I don't know. Maybe it's a market-wide thing. Maybe it's the main operators. I don't know. Whoever did it though clearly used, I mean, look at this, guys. Even the reaction here back up in November and December is like the same reaction. It goes to the same mark and then tries to drive the price back down to a new low. That's right where we're seeing the exact same divergence and RSI comparison and the OBV comparison being really, really similar. It does a 50-50 slide and then it goes back up to that and tries to test above. And then of course this is trying to break a creek. It makes perfect sense then that if this were to manage to get above an SOS, that's the breakout value right here. It should just go. Like it would make sense. That's a gap fill to 20, and it's a gap fill here that I think was baked into the overall trajectories. And I mentioned this before. I don't like this as much because I think it's a little arbitrary. And I was messing around with this the other day. But in theory, when you do a look back at like certain things, like if you look at this versus, I want to say like right here on this top. So the base of the uptrend, right? Remember, this is the uptrend that was lost, quote unquote. When we talk about that, when we talk about really all of this, we're talking about potential trends here, right, that are kind of lost. There's weaknesses, then they dive through it, then they come back to it and check it. There's, weaknesses, then they go up and dive through it, and they come back up and check it. That's the main motion here. We're doing that on a huge scale, and that's true that most of the time what I found, and I don't know why, but most of the time what I found, meaning I just don't know a really great explanation for this, and this did happen in 2020 as well. They create a gap right after the last LSPY, and they go down. And I already talked about how this is like halfway to the bottom and then halfway back. It gets you right back there to the day. That's kind of the motion. But there's a gap right here that's filled in that process. That gap, if you look at the trajectory of the last known kind of bull trajectory here, it's from the... This is where things get difficult for me because we had the shift and I have to kind of take that into consideration. But like, if you look at the trajectory from this bottom through the top that was made on August 2019. So there's a bottom on December 2018 and then there's a top August 2019 and then it starts going down. That actually leads to the gap fill. Like it's a triangulation to the same spot that we later fill the gap at what is now like 79.41 or something like that. Like it's essentially like a perfect triangulation. So the bulls, I don't know how, but maybe it's because of this macro view. These operators use, because they're trading on like 4-hour and daily and weekly charts, right? So there's already like an implied potential that we're going to come back at some point and hook back up here and fill that gap based on that triangulation alone, which is strange. I've found that that's somewhat consistent, but it's not like an all the time thing. The reason that it bothers me now is because unfortunately, we have kind of like broken data here. So there was a drop and a reaction back up. If you just use those, then it would be implied that like, oh, this should have been at the top like back in October or something, like it doesn't make sense. When you consider the shift, it becomes more complex because there's an issue of like where is the actual top. Technically, if you did the shift value as I did it, this valuation does have a top that's higher than the previous, and so on and so forth. Like you have to kind of go through and look at it, and I did it the other day in some detail, and it didn't. I gotta be honest, it just didn't really make sense. Like there wasn't much to it that made me think that that's definitely going to happen. When you use these trajectories, all three are different. So like this trajectory is really low, this trajectory is kind of in the middle. If you use these two bottoms, they're different. If you use this bottom and this top, it's different. If you use this bottom and this top, it's different. What it leads me to conclude is that it's inconclusive. On my part, I don't think I can get an accurate read on it. I probably shouldn't use it. And then even worse is like, well, you could say that, hey man, what if it's like that? It's like down here or something, and it's really not going anywhere. It's just going to go down here. Well, all I could tell you is that like, I don't know how that would make sense. Like, I don't know how to do that. Like, what does that mean? What does that even mean? I have no idea what that means. It means nothing basically to me. Because then you have to look at this as like, well, there's a gap there and it didn't get there and blah, 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 blah. It just becomes this big waste of time, essentially, So I did look at this the other day, but I came to zero conclusion about it. And I don't think there's a good answer. But I do think that overall, that's a probability that's there. Like there's a gap at 4650. I think it's a real gap, right? Obviously, that gap is not the same in terms of importance of filling due to the market shift, because then you think about value. But because the market shift does accurately translate the gap to 1960, it's reasonable to say that yes, because that's the equal shift value, that you would indeed, in this move, instead of going up to fill the gap, let's say again, had this triangulated like perfectly, you would say, oh, it's going to go fill the gap here. And that looks right from a distance, but I'm like, I'm already telling you, like, it's not quite right. At least the way I've been looking at it, I can't quite put my finger on it, like where it's supposed to be. It looks right from a distance. It looks like it's going to that triangulation in January. And if that were the case by itself, I think I would not be able to make a good case for it. I think I would say that, meh, like just because that gap triangulates there doesn't mean you're going to hit it then. If it were not for the fact that then this triangulation also points to the same spot. Now, at first glance, you're probably thinking, well, it doesn't because it's way low. But that's because the triangulation isn't where it was, right? Like, you guys are like, what? Meaning like the valuation triangulation here is different, right? It's still pointing towards January area. The valuation triangulation has to be shifted as well, and it has to be where it is. And I don't think that it's wrong to say that it could go to like 20, because remember the PNF back here was like $16, $17, and we've already added a lot more. I'm willing to bet that it's probably close to like $19.60 or $20 at this point. Depending on how we do it, probably ends up being correct. And we could probably include some of this other time in theory if we really want to, though I probably would not advise that. I would just do from May forward. But if you were looking at a macro picture with PNF, you might be able to argue that you could include some of these. I think most of that should be exhausted by now anyways, because we made the big move up in May. So by itself, it doesn't stand as the strongest thesis that you're definitely going to go back up and fill that gap or something, but it does lend itself pretty well to the concept of like, we may not go right when we think we're going to go. It's pretty close to triangulating at this point in early to mid-January. That really has to be then based on one more thing, right? Which is there's a gap here as well. So this gap is now triangulating to the place, not this gap. And the shift already happened, so you'd have to shift this down. That doesn't really give you a lot of confidence because you're kind of moving stuff around a little willy-nilly. Instead, I went and looked at the 50-50 point. So I just double checked it and I was like, all right, let me see where this is. So what this one is it's a anchor. If you're wondering what this actually represents, this line, you might think it's just a trajectory mirror, but that's not actually true. It's not. It's actually from the bottom to the gap, where the gap opened. So it goes from the bottom through where the gap opened at 291. That's actually the basis for this line. This line then continues to be relevant, and it ends up representing right here the double flush and then the rejection. And this is essentially like the downward wave after the upward wave. That it's right where it should be is a good indication that it's correct. But I took that line because in the original build out, though I'm not using it right here, in the original build out, it's the same. If you go from the bottom through the gap, where the gap is, it essentially points towards both this intersection and the ultimate top. I believe it's like a little bit steeper than the line that you see right now. Like it goes a little bit steeper. It goes more up to like near the top here. But essentially it's giving you like a projection forward of direction. This marker that I did pick is a little bit better in that it supports here a wave cross, right? Which is really important because this is like the middle of the wave. The other one does, but it's not as relevant. So when I took the markings here, I did not use this line and mirror it to the right. I used the right line and mirrored it back to the left to check it. And it is correct. Like, it does give you a really good, adequate trajectory back all the way to the top. So do I think that that's likely the mark? Probably. Is it possible that I'm a little bit off and it needs to be even a little bit steeper? Possibly. Or a little bit shallower? Possibly. You know what I mean? Like, it's not necessarily that I know that this is it. This is the only one that's possible. It's more like it's very likely. If anything, I would suggest that going upward here may make a little bit more sense if you're trying to catch these three wicks right here, these three tops right here. Going upward like slightly would catch all three of those. It doesn't, however, then match perfectly. It's very, very minor change. Just leave it there. I think I had it in the right, but very minor change. That's 4073, that's 4047. So if you were to change it like just slightly, it becomes off. This would then be a little bit early, right? Do I think it has to be perfectly one-to-one? No. But it's close, you know. So if the question is just like, where does this intersection lead? And again, I don't particularly think it matters if it's perfect, but if you want, we can make it a perfect version of that just based on the left side. I guess we should do it just to do it. Why not? We're here. AMC's at 0%. It's not moving. We could take this and drive it. We'll just put it out here somewhere, and then what I'm going to do is eke it up. So this was at negative 4338. We're pretty close. So what I'm going to do is take the coordinates, and I'm just going to push this top one up till it says 4338. So I tried doing this with the mouse, and it just doesn't work. They changed it so it's got 100th place, which is great, but it's really hard because the mouse doesn't hit, like it skips points sometimes. So it's like, this number is irrelevant. It's just about the angle. And then the gap here is at 1960. So you'd say, well, where does that intersect? Where does that intersect the gap in theory, if it hits there at that time, which it doesn't have to, but if it did, it's either there or it's like a pivot for a bottom. Where would that happen? Monday, January 13th. Is it possible that that's the low before the breakout? Yeah. It's frustrating as that is. It is possible. We've seen that before. It also is a really good measurement, though, because the thing about the 13th that strikes me as like really profound, and that angle right there is really profound, is that when you take the measurement back and you look at the middle, in 2020, that middle trajectory for AMC is the middle. Like it's the low, excuse me, that we dropped to in March. It is the direct middle. Like it's, again, I've said this before, but it really is like to the day, essentially, right there, like where you leave it. You know, if it's off by like a day or two. You know, it's not like incredibly off. But I think I got it pretty well anchored at this point, and I believe it's correct. So like I did that just to see what it was, and it enters and then exits here based on that gap down. I did this yesterday. We had a lot less people on stream, so I'll try to do it really quick here again. But essentially, like, I'm debating, I don't know in my head which is more correct. If I should use August 24th, if I should use the second gap on September 6th, or if I should use the first one on August 11th. I decided in my head that even though this gap is reset, that it would be better to kind of conclude that this move, I don't want to say it's irrelevant, but it's kind of just getting you to where you need to go and like resetting the gap. I think what's most likely is that this is the correct starting place over here on August like 11th, 2023, because that's the original drop value. And then this would be like a shifted version of that right here on August 23rd. It doesn't make a huge difference because if you look at where the middle is, if you think the middle is, this is where you're going to be like, oh, I see now. If you think the middle is the bottom, which is April 16th, guess what, you know, doubling that value gives you? Well, it doesn't give you, you might think, oh, it gives you January thing, right? No, it actually gives you like the 17th of December. And you're like, well, that didn't happen. So you're saying that's the move right there? Maybe it could be the pivot for the bottom, if that's the case. But this is where things get kind of interesting because the shift value does line up with the second drop, which is the drop in from 13. So it's kind of fascinating, right? And then the first value, the third shift value, which is kind of this middle one, which I'm not using very much. This is like December 30th. So the dates implied, if you think it's from the beginning, and that's the middle, and then it's fixed, would already have passed. But if you consider that they took time to shift it over and drop it again on the 23rd, which kind of resets everything, and then again, there's another gap value here that could have potentially been the right one. Why? Because remember, with the shift value on, if you look at it carefully, you can see that there's a gap here, and then it would have bounced. There would have been another gap here. This gap would have remained. It's in the right spot. But there would have been a gap right here as well. So it's like, well, which one is it? Technically, both could be true, but this is in the range. This is right below the range. In 2020, the one I measured from was the one in the range. So let's start a debate, right? I don't know. I would say that this is most likely meant to be like a drop from this range. This like particular opening that we made down here at 1650 is equivalent to essentially us dropping right here at 3644. Then there's another gap that starts the process. This is where things, again, get maybe a little bit dicey. But the point being that, like, if I believe the triangulation is true, and if I have the right middle, which I think I do, then this actually lines up really well right there, which is to say that essentially going from September, that September drop through the bottom and then back up again, the implication would be that you would have gotten here back to the appropriate gap fill by January 10th. That's a pretty big deal. Like if the measurements didn't make sense at all, I know it looks like I'm like fudging it because I took it and I moved it over, but that's not really fair either because they moved the chart. Like I didn't move the chart. Like you have to take into consideration that this was shifted over about 2 weeks or a week or two or whatever it was. It wasn't that long, but it was from the 11th all the way down through the 23rd, about 2 weeks, I guess, week and a half. I don't know. No, it's about 2 weeks. It's like 7 and 6, right? So it's about 2 weeks. So there's like a 2-week margin of error here because we don't know for sure how an institution might interpret that. And I think the intention here was probably pretty clear that like right after the split, you generate that last point of supply here. You generate that and then it drops low and starts again. And I think that makes sense to me then from the building perspective that you would use that. And then the fact that it triangulates perfectly from that bottom to top trajectory should not be, in my opinion, like it shouldn't be a big question mark. Now, you might say, but then if that's the case, shouldn't we be up here in November? Not necessarily, because again, what we're talking about now is like values based on shifting values and all this other stuff. It's confusing. If I take the steeper trajectory here and I go from like the bottom of the gap or the top of the gap, again, it like changes quite a bit pretty rapidly. This is where I'm kind of like a little bit, let's just say I'm lost because I don't have like a strong opinion about it. I think that you could make an argument that it should be from the bottom of this gap or the closing on that gap. You could say it's from the top if you think it's going to fill. Where did you measure from in the other one? Why would you not do the same thing? So on and so forth. This is almost negligible, this secondary move here. So let's just ignore that one. This one's 43.08. So there's almost no reason to worry about this one. Let's just go to 43 and see if we can get close enough to 08. That's 06. All right. Okay. That would be the second one. This lines up a lot better, perhaps, with the earlier thesis of like, oh, it actually goes by the 30th. That's pretty crazy. That'd be a huge move. And I don't think a lot of people would see that coming. That'd be really fast. It also would have to be like, consider that maybe like you should be looking at this, in which case, no, it didn't happen there, you know. And so on and so forth. Like you keep going backwards in time. I think where I probably run into the most trouble right now is that I found that the best one, for me personally, I think the best one is the forward-looking one because it's the only one that I know for sure. Like if I go backwards, I'm kind of guessing. Like I'm guessing at this trajectory because I'd have to go back and make this shift value would 100% have to be correct. I couldn't have any form of error here. And then even if I did, I can't snap to that. I'd have to kind of like estimate where it is and like where that gap is, and I'd have to use that trajectory right there as like the basis for the outward trajectory, and then I'd have to do the shift and blah, 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 blah. And if I were wrong about any part of that, then I would be wrong about all of it. Like it becomes a problem of precision, I suppose. Yeah, I mean, it's just kind of messy. And if you're wrong about any little part of that, then everything can be thrown off. So I'm not a huge fan of the backwards trajectory. I think if we didn't have the shift, we'd probably be able to do it without a second guess. You guys are like, well, that sucks. That's convenient. No, I don't think it's convenient. I really think it's just a matter of like, the better trajectory is the one going forward because we know, at least for there, we have multiple hits on it. So here we've got the bottom here for sure because we know that's the closing value. And then we've got multiple points right here that also meet. I don't think it's as big of a debate for me. I think this is probably the right one. But if I had to, fiddle with it and try to do it like perfectly, assuming that my gap value is correct, and maybe it's not, Yeah, it's dicey. Maybe 140. I mean, maybe this one, which is really steep. I don't know, man. It's tough. I think at the end of the day, probably better just to use what we know is probably right, as opposed to something that we're not super sure about. This to me feels a little bit like guesswork. I can tell like I'm sort of sinking into. Oh man, I forgot the number already. 143.94. This is the only way I can think to do it. Right, so AMC's going low. It hit 401. We're gonna need to take a look, see what's going on the micro. Yeah, it's a similar story though. Like it's still right around that end of December going into January. I suspect though, if there's some kind of a motive to sort of prevent maybe options from rolling into the money, they may wait till after mid-January. I'm thinking about that a bit. I'm like, yeah, some people would get really messed over by that. Myself included to some degree, I guess. Some of mine would get messed up. So I mean, it's not a bad trajectory. I don't see as many clean hits on it. That's why I suspect they made a new one right here based on the chart as it is, not the chart as it was. And then this is where I would have some issue because I'm not really worried about being low. Anyways, it's right there. That's another question, is where does that meet the actual creek? Because that might be a key point to this as well. Triangulations are nice, but this triangulates to yeah, it's like the 17th through the 30th. But where does it actually meet the creek? That would be a good question. I think I snapped this. I'm going to make sure though. Pretty sure I did. That's interesting. So it actually meets the creek between 7th of January and the 30th of January. There's like another window here. Another thing that's kind of fascinating is that if you look at the last two trajectories on the AMC move on the bottom, they're also, without going like too crazy detailed, they're also really interesting because they go through some of the levels we talked about before, like the 469 kind of area. Excuse me, 869 kind of area. So there's a bottom to top trajectory from where it found like support and then where it hooked. This is interesting to me because this is 869, and I'm like pretty sure that's about halfway at this point. So even though like I'm using all this other crazy stuff to talk about and define the movement of the chart, what's interesting is that that still stands as the last major trajectory. It doesn't seem possible when you look at it and you say, oh, it's going to be on like the 30th or the 31st, whatever it is. And I'm like, it doesn't seem very possible that it would hit that, but it is where it should be, you know? Like I think there's a bent towards that 860s area. Like really, it should be there, right? Like that's kind of like where I would place it. Maybe 853, maybe not 869, but it's really close. It's really close to that second triangulation. It's on the 31st at like 863. I'll just say 860. So that kind of crazy to me because I'm like, well, while I don't necessarily think that's going to happen, I'm not like going to sit here and try to make it sound like it's all good or whatever when it doesn't feel good. Especially if you're making breakdowns or something like that. That's not good. That would be like a good point of movement. When I go and look at what I think is a triangulation target up here in like January around 1960, I go to where we are at the bottom. It's very, very, what's the word? You guys are like, convenient. Yeah, that's the word. It's really convenient that when you go and look at this setup from that point of view, if you go to the bottom here, which was 393, that midway point between 393 and where this macro trajectory is over here, again, maybe we can debate which one of these should be used. But right now I'm just kind of using the lower pink one. And I'm using January 15th or 16th as the area where it really kind of collides. I'm not sure why it's over here on the 13th. It should be over here. I feel like I've said the 16th too, but it said the 13th. Not sure why that is, but it's on the 13th, or it's on the 16th. When we use that and then look at the midpoint, that midpoint is like 876. And then if you look at this trajectory, it's like 860. The midpoint of that, of those two, is the 869 level that I harped about for ages. You know, it's like right in there, in that pocket. I find that to be peculiar. Maybe it means nothing, but it's definitely a possibility that this is a short-term trajectory for like a midway point on a macro breakout move. If the low that's made is 393, this is like a perfect setup for a 50-50 around like the 860s, which is a good level to go around. I mean, we've talked about why that might be at different times. The other place that's come up quite a bit recently is right below here. It's like 656 or something. That's another one that's come up quite a lot. I don't feel it as strong maybe as some of the others, but it's definitely there as a possibility. If we did a quarterly breakdown on this, so we went to, so let's actually just pick the middle here. Let's not use these lines. I use those because that's where the lines are in the past that look a little better, and that's where the intersection is. But I'm going to use 877. Again, in theory, this should work. Let's pick the middle. Let's say it doesn't make another low. And it comes down to, I'm just doing a 50%. I'm not doing anything like crazy fancy here. Then the middle would be 586. We have 2 wicks around there on the 13th and the 14th. It does seem really close to the support and resistance mark at the top. It's not perfect. I won't say something's perfect unless it's perfect. It's not perfect. There are 2 wicks to it back here on that big wraparound, but that's the 50% mark. So you're seeing how, like, if this were to potentially like take off, where would you see that expanding happen in terms of like the movement out? It seems pretty straightforward. I don't feel like this is much of a mystery at all. I would just be surprised at all if it runs, just because of the nature of like what's happened here. I'd be really like, what? It's running. But like, if we somehow manage to do that, I don't think on the whole I would be that surprised by the numbers, because the numbers themselves are fairly logical. Why does it have to be 50% divisions, book C? I don't know, but the market likes them. I don't know if it has to do that, but the market likes them. The market also likes slingshots, and slingshots tend to be a 50-50 kind of thing. So, you know, if we're to believe what I've got on the screen, at some point you'd probably have to come back and contest these ideas with like a waveform. I don't know. I still don't know what would be the best way to do this, you know. The waveform that I used in 2020 was not set on this as the middle, on that low as the middle. It just wasn't. And it doesn't really match that. Waveform is kind of set up secondary to that. And its middle is not, it's like where it breaks out, if I remember right. It's like right where it breaks out here. This is like closer to the middle or something like that. This does work. There's no doubt it works, but it's not the same. Like, I think the wave is better represented as the entry and exit, and then this going down. This tends to be a better wave. Messed that up. This tends to be a better wave than the other. So that's not the middle, right? That's like, it seems arbitrary. It looks like the middle of this big outburst right here. Weird, right? How can both be true? I don't know. But they are. And that's the thing, is like, I think that when we get down to the nitty gritty of it, it becomes a question of just how you want to draw it. And that's too subjective. So I don't know. This is a tough one for me. I would suggest that this is probably where that is, because if you look at the upthrust that happened in the reaction after March 2020, there's like three major ones, maybe 4. And we've got like a 1, a 2, 3, and a 4 right here. That's as far as it goes when it finally starts building out the structure. It would be more accurate to say that this top on the 6th, not the one that happened on the 14th, is indeed the peak, even though that's odd. Because again, there's like 1, 2, 3, and then it starts the breakdown. So it's like, the question isn't so much like where does it peak, it's more about where does the breakdown start. And like, I think it gives you a better answer, because that ends up being pretty close. The basis for this structure ends up being pretty close to where the actual waveform center is. It's closer to like this final peak. So I don't know, man. That's not a really great mathematical way to do it, but I don't have any other really guidance. So like, I don't know, maybe right in the between these two before it breaks down. This is the same kind of structure here with the breakdown. So maybe like here. Big maybe. Big maybe. Well, and it would make sense, because then you'd have to have like a longer, because like what the wave does do that this little V shape does not do. This V shape doesn't predict anything except for maybe the gap fill. And other than that, it doesn't predict where a reaccumulation would occur and then break out. It doesn't do that. So you couldn't use that V shape for that purpose. The wave does do that, but you have to have like an idea of where the middle is in the beginning. I think it dips through about the same area. So you can see it's like both of them are dipping through, traveling across this line, this anchor, which is again one of those parallels. And I think that's because of the shift value. And it is used before like I get accused of like making it. It is very much used. It's the same parallel right here, that red line coming through. In other charts I had it green, but it's red coming down through here. So this is a dip through that and then a reaction back up to it. So I guess in theory, like that could be pretty close to right. It doesn't have to be like perfect. So the idea would be that you'd come back up here. Ooh, that looks, I said it doesn't have to be perfect, but that actually looks really good because then it looks like that breakdown is right off of that wave. And this looks pretty darn convincing. This right here, and this right here, and this right here. That's pretty clean. That might be right. That might be right. I've been back and forth on this wave. I think I fudged it a little in the beginning. And I don't like that I did that, but I feel like I fudged it a little. That looks accurate. So this would be like April, May. So I thought it was more like June, but it looks closer to April. Is it the same distance here? This is going to be a big, big question. You guys are like, why does that matter? Well, it does. Son of a bee. It's the same distance. By George, she's done it! What if it's lower, man? What if we think it's going to go to 20, but it doesn't actually fill 20 until April? What if it just goes up to like this gap at like 13 and builds out low, kind of like it did over here, and it builds out lower down into the 7s, then goes to 20. It's like a two-parter instead of going straight up. Yeah, but you just said that was a 50-50. It is a 50-50. There's no speculation about that part. It's more just like, what about the nature of the reflection? This is what I didn't like about the curve. That's a big deal, by the way. And you guys are like, well, who cares? So it's the same distance? No, it's a big deal. Because this lends itself back to the thesis that it could be the same. When this went through its processes, the structure here of this breakout is the same. It's the same distance. So it's really important to me that's like, I don't know exactly why that is. Maybe it's like some sense of like unwinding or winding or something like that. I actually think when I measured this, I probably did, that looks like it's measured from the bottom, not the top. What I probably did was I used this marker here because I was using at the time, I didn't use this gap. I used, so maybe it's not wise for me to do that. I don't know. But that's the thing, is I'm not really sure how I would translate that presently anyways. So when I first did this, I used, because I just don't know. That shift value makes it awkward. I don't know where this point is. Maybe that's like where the gap is after the shift. That might be a good way to do it. That's the same distance. So there's a 1, 2, 3 over here and a 1, 2, 3 over here. It's a mirrored structure. But I believe I used that because it's where it broke above. In theory, though, maybe I should have used the higher one, and then it wouldn't have been the same. But it is a big deal to me that that's basically the same. Like it measures backwards to that gap fill intersection on the 16th, which is interesting. So what I was saying is like, if I were to change it, I don't know. I guess I would use this. Like that, because that's where the drop is, that's where the dilution was. So that might not be as perfect, but still really close. Yeah, you got to be fair. You got to make it consistent. So this implies more like the 22nd of January as opposed to the 16th. Big whoop, you know? Yeah, it's the intersection of the higher point. What this is, it's a little strange because it looks like it meets nothing. If my shift value is correct, then it actually means that this gap is not lined up perfectly one-to-one with this gap. It's off by like that much, so from the pink to the orange. So what I did is I took a copy of that earlier. I don't know if you saw me doing that. I moved it down. So it would imply that like even though this gap fills at 1960, that you'd actually have to go to 2070 or something like that, roughly, to get to the real quote unquote real gap fill, which is at like 4650. I know it's confusing, but yeah, like so 2065 is if I did the shift right, 2065 is where the real gap is, and so this is actually offset a little bit. Yeah, that could bring up a lot of good debate. Maybe you didn't do it right. Maybe the gaps are supposed to be exactly the same. I can't assume anything. I just know that when I did it, I didn't use the gaps. So the fact that they're really close, that's just a bonus for me. But the fact that they're really close is just kind of a bonus for me. At the end of the day, I'm not sure it matters that much. It's not significantly different enough. It's $1 difference here. It does change the timing. It definitely makes it seem like the 22nd would be a more likely candidate if you were just using the other structure. It's a lot of dates. So I don't know. I guess it's safe to assume, in my opinion, if we were going to get this run, that we would probably look for not December 30th. December 30th would be some kind of like a midway area and or like a bottom pivot. Like that's where it would kind of stop and start turning around even. Just depends on what happens next. It does to me seem like right after that is where this intersection is. So again, if it's a pivot intersection, that could mean that that's where it starts breaking back up. Now that sounds a little weird. Like, well, how would you know? I don't. I think what this is, now that I have this arc on here and I'm looking at it and I'm like, I don't think it's easy for me to deny it at this point. I think what it is it is a desire to get back to that anchor, but it's a desire right here to try to recapture the wave. If you recall, when we studied the 2022 model, we talked a lot about how there was an effort to recapture like a bigger waveform that didn't ultimately succeed until the very end. There is a lower wave here that definitely has some credibility as well, and that is right there. That's the one that splits this guy in half. So there is another one. You guys are like, well, that's not cool because now we don't know which is which. Well, yeah, it did not have that motion. This does make sense to me in terms of like the 50-50 because if you're laying it up, both of these would get you to those points. Boom, boom, right? On the wave up, wave up. It seems like too much, but I see it as like a corrective measure that liquidity's already kind of pointed out that we're wanting to go that way. This becomes like a big distraction sell-off that then causes a lot of people to like lose their positions while institutions buy in. And then you just whip around, boom, boom. It's kind of like, it's a little speculative, but at the same time, it's almost perfect. You get a very strong sense of like direction here from the stock, that it's moving upward. That's like a parallel. You just have a lot going right there, and that's all built into the wave. I can't believe I'm saying that because I feel like this is a huge risk to be like, oh, I think it could do this. But it's there. When I first looked at slingshot setups in comparison to the 2022 March break move, which went really high, it was like 160% or something. What what institutions had done was they had created markers that were used later in the breakout. Now, we didn't see those markers play out here. In fact, it kind of did something weird where it went up and it tried to use, like this one, for example, is like right on the mark. That would have been one of the markers, right? But there were some that were kind of left out. Like the one right around 455, this guy, this would have been a marker that I would have used. But there's no, aside from the break here, there's really no place where it ever holds it. So it's kind of curious because it's like we checked some of them, but we didn't check all of them. We checked like the lowest ones, then we checked higher. We didn't use the one from 540. We didn't really use the one from 527, arguably. Even though we were up there, we were kind of just pushing through it. So what these are like little layered drops. So they're drops that appeared in different spots as you went back up. Essentially, like we left them alone, right? You pushed away from them, and aside from maybe an upthrust here or there, we don't really come back. When the stock marks up, usually what you find is that those little layers that you left behind end up being the main layers that are used as like support. So you would see like opposite where these little drops were, you would check them all on the way out because the institutions have like marked them off to be checked. So we've got a lot that were, but then we have a lot that were not. I'm kind of curious as to whether we use those on the way out, if we did go. So one would be, I think this. I don't think this was adequately checked. And now we're like beneath it, which is weird. See, like this one doesn't have any real hard and fast holding except for right there. It's around 450. Now we've made a little upthrust. We've marked off the top. It actually would work really well if we went up and held that. Pushed up to like 470, came back to 440 and held it. And then this one, I'm not 100% positive, but I think it's at like 480. It might be the 485 level that we've talked about a lot. This one was almost used. You can see it was lost. You know what that looks like? You guys are like, it looks like a 50-50. I'm just imagining like the Price is Right argument, our audience like out there, and they're just like, it's 50-50. You know what time it is? 50-50. You guys are like, what? Shut up, Booksy. I'm not a Price is Right argument. It's a 50-50. It's right there. That's where it should be. So that's the next 50-50. Wait a minute. Were you trying to say that that's another 50-50 right here? Well, if it is, then good for us. And it is. Good for us. What? What? You mean there's 50% layup levels that are built into this stock in case it goes to the upside that they can use and drive the price? There are. That's crazy. You know, the only thing crazy here is you, Booksy. Nah, dude, that's institutional marking. I don't believe in that as a coincidence, because if you, again, go back and look at some of these other markup moves and then go backwards further, go back to like any big run up, right? And then go back further to like those drop zones that happen opposite of it on the wave. And that's what you find is like the ones that are like the major catalysts, like this would be one, this would be one. These were like the 50% drop zones. Those are then used on the way out, and they typically line up with whatever the bottom is. That to me is very, 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 very convincing. Yeah, it's right there. So this is weird because it doesn't drop till the second M right here off the top at like 438. These are levels that have been used. It's not like they're brand new. You know, you're not picking out something that wasn't already in use. So like the fact that it's close to 485 or it's 487 or whatever, that's not exactly weird. It just kind of is what it is, you know. So yeah, this first one gets you up to 482, just slightly low. The second one gets you to 587, which is right where it should be. So one of these might be a little off because that's pretty tight. I wonder if it's this. This is actually like 483 or something. I bet it's 483 because that's used here as the anchor. There's a secondary drop right before. And it was used here at the top. That was the last support before it dumped. I think it's supposed to be 483, not 485 or 487. What if it goes lower though? Well, it might go lower. The point is that these are like 50% layup values. I don't think that's an accident. Usually you don't make those. I mean, it could be just there, like as a potential, you know, but I'm finding that to be peculiar. That's definitely not an uninteresting thing. He's crazy. A little bit. All right, so without drawing a bunch of boxes on here again, I'm going to leave it at... I wonder if it's trying to catch this $4 mark on the dot. There is a trend here. I don't know. It really, for me, it's like there's actually a lower low possible. And I know we're like, you guys are talking about 50-50s. You can't just like, yeah, but there is technically like a lower low possible here. I don't want to worry about it unless it happens. Because when I looked at it, the creeks are fine. There's nothing wrong with them. But there's a setup. There's a setup creek that could slide a little bit lower as a result of these two wicks. I think it was this one, and there's another one here that leads backwards. But we'll find out. I don't really care as long as it makes a higher low. If it makes a higher low, I would be like, that's good enough for me for now. It does seem like it could come down to like $3.99. I think the only real question is like speed. How do you know how fast this thing's going to go? How would you possibly know? You just can't know. It looks really fast. If it hits all these marks, it'd be like brutally fast. That one's going backwards in time. That's how fast it is. It goes in reverse. Whoa, we broke out yesterday. What? Wake up in the morning. We broke out yesterday. We didn't break out yesterday, but now we broke out. That'd be really funny. They're going so fast. They're moving in the past. I guess the best way to do it would be to reverse trajectory it, but I'd have to just kind of assume that one of these is correct. I can't do it unless you're pretty sure. I'm going to take the pocket from the 14th to the 22nd as kind of the gospel truth right now. If this is true, I think it's going there, and then that would be crazy and blah, 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 but whatever. The rest of this, I don't think you could take. How fast could it move? That's a hard question, man, because this is something I've never seen before. I mean, technically, what if it just waited until January 20th and then it just went blip? What would you guys do? You'd be like, oh, okay. You know what I mean? Like, it's not even funny, but it's like frustratingly funny in some ways because you're like, well, I don't know what I would do. you know? I don't know. This rotation, if you take the amount of time it took, it's pretty similar to like now. If you look at the move, and this is how I would do the rotation here, is I go to like the top to the bottom of the move along what I think is the waveform center. And I would just copy and paste it, I suppose, to wherever I think it's going to end up. That's it. Booksy said it. It's moving tomorrow. I mean, it is tomorrow, but that tomorrow would be like the beginning of a move. Again, if it were rotating around this mark, that would be a reasonable expectation. It would also be reasonable to say that it could potentially delay a long time and then just go straight up. I would think it would, if it were reversed, that this would be like a straight up move followed by a more chop on the top, because this chops around the line. So it would be like, all of a sudden it would just be like blip, and then you would just go, say that again, Booksy, blip, and then it would go up here like after the fact. That doesn't really make a lot of sense to me, but I guess it could if it were like a double top. So it has like a push, and then it backs up, and then it pushes again. Yeah, so like in terms of rotation, this would imply that like tomorrow or Monday would be like bleeding up forever and ever. You guys are like, that ain't gonna happen, Booksy. I know, but in theory, if you just look at like where the move itself was, that's not exactly unreasonable. Yeah, it is. No, because it could be anything. You don't know how you're going to get from A to B. That's the way I would interpret a rotation here, which is basically like a big S curve. Can WTO hit $1 this year? It looks pretty bad. Yeah, I don't know, man. It's like a lot of these stocks. It kind of has it in the setup that it could break, but there's just a lot of problems with it as well. So I'm gonna see what IWM did. It just went down a little further. It's fine, man. Like I said, I thought it'd probably end up down here. So I'm not really worried about it. It looks good. Let's just stare at charts that make us upset. Let's just look at charts where people have already gotten bajillion-dollar runs. Stop saying bajillion. I can't. It's like, for some reason, it's stuck in my language right now. I can't get rid of it. I made $1 million on this run. Why? Because I guessed. It was amazing. Screw your TA, Booksy. Yeah. Well, like right now, this is a 4-hour chart. It definitely looks like a distributive effort. I mean, I hate to say it. It kind of looks like a chart that's trying to go bankrupt or get another split out of it. It's just ugly. It's instead of finding like stopping strength, every time it's had like bounces and stuff, it's kind of just distributed and come down lower. This is the danger of any kind of trade, you know? At some point, could this like explode to the top? Maybe, but it's not a trade that ever was without a lot of risk. When you look at stocks like this and they're these penny stock type trades, you're really waiting to try to catch a knife. I mean, that's what you're doing. It's a lot like what happened on that other thing we just looked at, Nucleus or whatever. I mean, yeah, like you could have thought maybe one day it'll go up, but at some point you're just kind of grasping at it, wondering if it's going to happen. I think based on what we've seen, this is a challenging stock for me because I do think there's potential, even in the midst of the craziness here, because it made a pretty sharp trajectory in the midst of this, what I would call like an M cross. The problem is that it's continually holding what I would say is like a strong, even in this low right now, it's continually holding a really strong RSI deviation. But on the flip side, this has been getting over, on the flip side, like the top, it's been getting oversold really fast at lower values. So it's not showing a lot of strength in a bullish divergence here for that reason. It gets overbought too quickly. Excuse me, I said oversold. I mean, it gets overbought too quickly. Like way too fast. It's getting overbought at like lower highs. And it just feels kind of weak as a result. So do I think it's possible that this is a wave still and it's going to work out? Maybe. We look at stuff like this all the time. It doesn't seem like it's going to work. And then we come back later and you're like, oh, it was fine. You know, we just had to wait a bit. It also is possible that these are just being used as hooks. It's not really holding them because it has no intention of following through on that price movement. Like right now, I would say the greatest bullish case for going up is like kind of expiring as we speak. It looks like this particular waveform, which could have completed around December 19th, which is today, it just didn't happen. You know, and even then, it's like that's a 50-cent move. This is the bullish marker for like we're going up. We failed to go up, right? And then we're just failing and failing and failing. But it would have been like timed out as a breakout, perhaps, to be around. Frankly, it looks like the 18th or something like that. And it makes you wonder because you see you can see that big wick movement was coming up above there, like it was trying to recapture it or something, and just doesn't do it. So very strange price action. Trying to give light to something that may not have the light that you really want is tough. So I believe that after the split, it's right here, it's at 80 cents. Okay, now it represents at 80 cents. That gap down probably going to be the best source of hopium that you might have for something like this. And I don't think it's necessarily bad that it could eventually go back up to $1 is possible, but that split happened and it's like that became $1 and then immediately dumped below. So it's tough, man. I would probably use this guy and maybe the $1 one in a similar trajectory model that we did before, and consider that it could take a long time to maybe build out. There could be like a flattened trajectory here of like trying to get back up right away. Maybe it gives us a hint. But these are difficult assumptions, I think. PGHL? I don't know what that is, but I'll take a look. Okay, well, so this is like way out here in like February 2025. If you think that it's a good hold, you could hold it till then. It doesn't make me feel like it's impossible. I feel like maybe there's a 50-50 coming up. That's just to get back to like 80 cents. I genuinely don't know. It's forming like a massive... It's had reactions every time we think it's going to have reactions, but then it doesn't break out. So at this point, it's formed like a massive breakdown. So my thought would be that if it does go back to $1 in the future, it may be like way later. Way later. I don't know. I don't really care. I didn't put that much money in it. I might just hold on to it. If it goes bankrupt, it goes bankrupt. You know, it sounds horrible, but like I'm okay with that. If you're not okay with that, then you should have been thinking about trading out a long time ago. Like we've had a lot of breakdowns since
we first started looking at this, and we got auto reactions, but they didn't break out. We had 1, 2, 3 major auto reactions, but they're not breaking out. They're not forming ranges. They keep going back down and making lower lows. So it's not a sign of strength. When it does that, it's continually getting weaker. If this manages to, as it pushes low here, if it manages to kind of hold, maybe it'll have a big reversal moment finally. But we've said that before, and each time 1, 2, 3 up thrusts right here, none of them held the breakout. Like all of them broke down right here. Boom, boom, boom. I mean, that was probably one of the greatest attempts I've seen for this stock to like rally. And it was close. It looked like it was trying to form like a floor and then maybe go into an SOS, but kind of just got sucker punched in the gonads when it started trying to run. So, yeah. So, at this point, hard to say. Shallow S-curve, maybe. Even if it was, I'd be looking at this channel right here. That's kind of the middle of the two bigger motions. So you can see it easier on RSI. So there's two massive bounces. Those are the bounces that I would use to trade this penny stock. I think those are the strongest. That's like the strongest arc that we have here. Oops. Oh, it's snapping, that's why. It's like, why is it doing that? It's snapping. That guy. It's like anything. If we use this as a model for understanding what I call like iterative movement, just kind of like what we were talking about on AMC, there's a possibility that these things layer up later to produce like a bigger run. But in order for you to really qualify that, you have to look at a place where there's clear and evident shrinking iteration. This is one that has very consistent parallels. It's the same parallel. So then you would look at this and maybe consider like where would those parallel structures be if they were to layer down in 25% increments or something. It's challenging. We don't have one, we have two lines. We're not sure which is better. Probably the top is just the most obvious. But we might consider like, okay, if I'm going to lay it up, then I can create and generate structure here and continue to lay. I mean, that's kind of what they're doing. This is like consistently the same. This looks like the exact same to me. So, yeah. I don't like it. So, probably pretty annoyed by that. That's interesting. So that's a parallel structure. It's not reducing. So let's go to the upside. I'm going to make this one like a different color since it doesn't match the others two. Probably ends up being right around there anyways. No, actually it's on the one that I have like kind of marked off, but it's like in a weird spot. Anywho, this is not a that's not a horrible structure. It's not exactly comforting either, because this gives me a sense of like scale. Even if this were to break out now and do something like with what happened with AMC, for example, it makes those double touches. Maybe at some point this goes low and then it breaks back above here and it looks good. And you're like, yeah, well, maybe it has that moment where it does squeeze like ridiculous far, but it's not everything's like AMC, right? But there would be like a sense of like impending possible doom because if it then distributed again, and I would imagine it'd be quite rapid, you can end up with a really nasty sell down. It's like this. That takes you to new lows. Like this is pretty common. you know, amongst these kind of structures. It would depend a lot on certain things, but when it gets to the top, I mean. One thing that's kind of curious would be this. Yeah, it seems like it's forming a bit of a widening too, which is kind of nice. So it would imply that you could go back up to the top, which is sort of what we were thinking anyways, around 50 cents. Top of the widening begins up here, like 53. So at some point, this could go back to like 53 cents if it broke out. It's a long way. I think it starts right here at 52. That seems about right. And that puts you in triangulation range. Maybe we can use that. What do you mean, Booksy? I mean that the though this setup is not very clean, there is a widening, and so therefore you can use the top of the widening as a potential target if you think eventually it might reverse. While I want to say it's 50 cents, it looks more accurate to say like 51 or 52 cents. This does not seem very likely, but this is January. You're like, that ain't happening, Booksy. I don't care. I'm just doing the triangulation. January 7th. That's pretty close to what we're seeing. If we think a market-wise squeeze happens going into January, that's definitely possible. And then the second one is the end of January. It's like February. Those are just triangulations. And that's the idea that this trend down here was developed as a response, and I think it is. We talk about this all the time on other stocks. I don't think it necessarily doesn't apply here just because it's a penny stock. This is where demand was trying to build up support to go this way, and then you can see that loss. It's fairly evident to me that that is indeed the trajectory. So I would say that it would probably come up to 50 cents by early next year, believe it or not. And then when you have that in combination with I don't know. I'm not sure what else we could do with that one, but that's about as far as I could take it. So what you're saying, Booksy, is we should be loading up on. I mean, like you could buy 1,000 shares of this. It's not going to cost you, but $250 or something. When it runs, if it runs 100%, you might make a good chunk of money, you know, but it's not going to be like significant unless you buy like a boatload, which I can't tell you to do anyways. That would be like the only time you'd really make a lot on here. What you get, you know. 100% is a big move. I want to double my money. Well, it's still not broken out, and unfortunately, it has to go really far. There might be a better time frame. I'm using 4 hour. I don't see any way to trade the RSI on 4 hour. There might be a better time frame. 1 hour looks pretty good. So every time the 1 hour is dipped really low, it's gone at least back up to the top of this channel. Yeah, that's a good one. Good one. Good one. These didn't really have very good anything, but at this point, if it continues the way it's continuing and it runs divergent, it's hard to know where the bottom might be. It does look like it jumped this creek though, so it may not ever go back down on RSI on the hourly like we would expect it to drop again here because it made that distribution. Like, oh, it's definitely going to go down. Maybe. I mean, it's an easy enough trade if it does. But if it doesn't, well, it's got 20 cents. It might. It would be a nasty little drop, potentially. PGHL broke your buy-in level. I didn't make a marker for it, so I'm not sure, you know. I wish I had, but I did not. This is not a really good one to trade for breakouts here. I'm just going to leave it at that for now. Because, like, if you were to set a breakout level here, you've been trapped 3 times in a row. I know. The whole market dumped Barrington. Small caps went down pretty far. So. Oh, yeah. Good deal. There it is. I don't know. Like, I was saying yesterday, it's just kind of like a keep it simple. I don't know if I didn't give you like any kind of target for it, but it looked right to me that it would break out if it was a wedge. So 1, 2, and then third motion. So it's got 2 hits on the bottom, which isn't a lot. I don't know if there would have been a better way, but because it didn't come down below, it doesn't ever make another. I thought maybe it could come back. So the best way to trade this would be pretty much to 2, because it should, in theory, eventually get back to the 60% break level. That's the target. So it's got a target in mind of, I don't know, I just put the thing there. It ended up being kind of right. But it's got a target in mind of that gap fill at 2. Not good to trade. I was talking about WTO. When I said not good to trade, I was talking about WTO. This is fine. I don't particularly think it's going to go farther than that, but you never know. The problem with this kind of a chart is that there's not a lot of consistencies with. There's just not a lot of consistencies. Let's just put it that way. I would keep it very, very simple. I would look at this as a trade of the wedge breakout, and I would probably go no further. I'm willing to put it out there that if it goes up and checks this, moving average, sure, it can go a little higher, maybe up to 250, but I don't think the trade needs to necessarily go beyond where it is. Assuming that this holds, and it has to hold, so maybe you have like a stop loss of 130. I think it could go up to 2 pretty easily. That is a target. So PGHL, maybe a good entry, up to 2. And if it breaks back down beneath 130, then you just wait and re-enter. There's no one size fits all in the market. If it manages to continue, it could even be that it drops here, breaks back up. It could just go. The weird thing about wedge breakouts is sometimes they have like full throwbacks. Like they could go all the way back down to like 1 or near 1 and then go again. And that happens. So it's just a statistical thing. So no, I didn't mean to say this is a bad trade. I think it's a good trade. It broke out, so simple. Simple trade. You buy here, you sell high, But you have to keep in mind that while I would love to say it just goes straight up there, that's not always the case. And you guys are smart about that. I don't think you're kids or anything. You understand that you're all adults here, right? You understand there's a possibility this could come back to the floor even. And if it does, it could affect the breakout target. It would change it. You'd have to drop it down a bit. I think right now it's reasonable to say it could go from 140 to 2 pretty easily. But it may be a really huge moment. But I think that, I don't know, it's an hourly chart. There's not a lot here, so if it holds through the end of the day above, I think you're in good shape. But who knows? This could move all the way up there by the end of the day. You know? I'd probably put a alert here at like 180 or 190. Maybe like 190 would be better. Because my thought is that a lot of people will probably sell as soon as it hits that gap. It may not be wise to try to wait for the top, even if that's in view. You could get, I mean, I guess it doesn't matter if you're just trading like shares or whatever, but this even has an options chain. I'm not sure. I don't know, man. It's a pretty simple breakout, though. The only other place you might see some problems is at like 177. If it, for whatever reason, if somebody involved doesn't want to take it up yet, they could create a channel. It's possible. Sometimes there's an obvious answer that looks really obvious, and then it gets to that point, you're like, well, why didn't it go there? It's like, well, they took it a different direction. You know what I mean? Like, oh, it went up, but it didn't go all the way. So even safer than what I said, is the safest trade would probably be like here up to like 175. It's still a 26% trade. I mean, it's a good trade. There's nothing wrong with that. That's a good swing if you're just swinging something. Let's check like 30-minute. That's overbought. Let's check 15. Definitely overbought. Yeah, so again, like I don't know if there was an expectation that it's going to fail or anything. Maybe a bit of a widening here. That widening could end up leading you all the way to the top. But if it did fail, you could end up right back where you were at $1. I guess we'll find out. Once it gets to breakout mode, shouldn't really look too small anyways. That would just be for like cool-offs. I would think that it would need to find support here at 130. So $10 to $11. You know me. There's other things here to concern yourself with. I don't always chart everything, so just kind of eyeballing. Like there's a moving average right there as well. Let's see where the 15 is. Kind of curious. Yeah. That already looks like it found support. Just looks like it's kind of squeezing into a corner here on the 15-minute. Like that looks like a wedge. I'm just trying to help with like the entry if you wanted to enter into it. Try to trade it up to like 170 or 2. You probably get a good entry here if you were patient. Mm-hmm. That's divergent on 6 minute. So the divergence started at 130 when it pushed up, and then it came down pretty low, went to 50, it went to 117, and then pushes up on weakness, and you can see that divergence shifting it down here. Now it looks like it's on the verge of RSI breakdown. That doesn't necessarily mean, yeah, it's like right there. Doesn't necessarily mean it's going to break low. This to me is fine. It's just it needs to find support again. So there's one of two ways to trade something like this. The first, I mean, there's a lot of ways, but I would say there's two main ways. One is to try to catch a bottom, and the other is just to try to catch the breakout. So both would require that you're aware of a bottom forming. So because it's pulling back, not a bad thing, it's just pulling back. But it did happen on a fairly decent divergence here on like the 6 minute. Again, 6 minutes a good chart for trading RSI short term, but it doesn't. It's a short term chart, right? So it doesn't necessarily reflect what we're seeing on a higher time frame. There's no divergence here on a higher time frame, but there is a wedge, like a rising wedge with good volume until the very end. It really drops off on that last push. That's just to say there's a little pullback. You could use candles to help determine a volume if you're really good at reading candles. A bottom, I mean. If you don't like candles and you're not that good at it, what you could be looking at is like inside candles like this. See how they like all kind of boil down? They look kind of the same. So they start really compressing with like no volume. Compressing with like no volume. And they're like inside. That's a good way to kind of see it. And that usually happens right before a creek cross or a change of direction. So like in these cases, when it came down, the volume shriveled up and then it broke out hard. That's a little different because now we've kind of already come to a peak. You can see the 1, 2, 3, 4. So there is a sense of potential breakdown imminent. I think it's probably this trend, it's probably the big creek cross that is in view. Again, I don't necessarily think it has to go all the way back down. There's a weird little gap on 116. But I wouldn't be surprised either. So if it ended up coming all the way back to like 116, I'd be like, okay, Let's check that retracement. Voila, 116 is a golden pocket. Again, doesn't have to, but it could. I don't know, man. So RSI kind of resetting a little lower than it was down here after that divergence on the top. I would just say best practice here would be to be patient. You could buy in if it comes back over the top with a really short stop, or you could just wait for it to make a bottom. I think it needs to, I don't know what it needs, but I think it could manage to find itself a lot healthier if it comes back to 116 and then goes again. It could be a much bigger potential move. So we're getting a lot of selling right now. It's just about being patient, If it holds 131 and it starts advancing, I think it's probably just like, okay, let's just go. It may end up being overbought on small time frames quite a bit. all I'm saying is like when you look at the structure of this wave with the 1, 2, 3, 4, and then like where the 2 and the 3 are, that's the middle right there. That ends up being a really simple way of understanding creek cross because it did. It crossed right there. It jumped the. It did. That's where it jumped the wedge. So it makes sense then if there was some kind of a weakness there that was left behind that you could retrace there. It turns out the way this was positioned from the bottom, it is currently pulling back at a distance that gives you a golden pocket retracement. The 618 is a pretty common, and the 786 are both pretty common early move retracements. It just depends on the move, right? It depends on the stock. Sometimes you're not going to get that. But on average, yeah, it's a decent way to interpret it. I'm like feeling like that 120 to 117 would be a good buy if it comes back. I think that'd be a good place to potentially see a bottom. And then the next place that I could see a bottom is right where it's at because it did come slightly above a previous floor back here, right around 130. So I don't necessarily think that coming all the way back down to full retrace necessarily makes sense, but it could happen. So yeah, I would say you watch carefully and see if it breaks here today. If you get a creek jump with like a retest on the top, then you can just buy in. So like if this does a little M thingy and then pushes back up, I mean, that's not really any reason to be like overly skeptical. If it looks like it's cooled off a bit, then it could just keep going. But I would also just advise, I can't tell you what to do with your money, but I would advise caution about this kind of a pump because it has already tried to come up on here and it was weak and it fell back. If you get a secondary pump and it's happening on like low volume and it just kind of faints to the top, it's entirely possible it's just a UTAD, like an upthrust after a distribution's already happened and then it's going to dump again. So I think it's kind of in the middle at the moment. These aren't bad odds in your favor. It's already broken out. I think a double bottom at 117 could be really, really strong. Probably the best thing that can happen. I think there was a tiny little penny gap down there. It doesn't matter that much, but I would think that's probably the best buy-in. And then I don't know about the 0.5 at 120. I mean, maybe. There was a top here. There could be a bottom there, but either spot. So those are the 3 spots that I would pick for potential turns. What about higher time frame? What about like 1 hour? It's way up there. It's got a long way to go. I bet you it doesn't reach that until it hits like 2. $2 way up there. It's a good trade. I'm just kind of waiting for a good entry. I create an alert at the top, and I probably create alert at like the 0.5, maybe one down here. I mean, the best entry, obviously, if you're wanting to get in on this, would be 117. I wouldn't say that unless I thought it was probable. I think it's likely it could hit there, but in reality, when these things move and they're small, the float's pretty small, especially. It could move really fast. So you may not get the pullbacks that you want, you know? And that's why you got to have that in mind as this might be a momentum trade where you need to kind of get in on risk on with a short stop loss and just let it go. Mm-mm. Weird chart. Well, so like if it went to 116, then my expectation would probably be that because we already know the target is up at 2, so we don't need to like keep kind of fretting about that. But what I would say is like at least the first target is I would use like an extension and just see if it makes sense. If it's an impulse wave and it's a breakout with a retest, then it's already pretty healthy. So I would take it down to 118, and it does look right. So the fib extensions that are most commonly hit are like 168, 1786, that kind of stuff, these two on the third wave. So it does look like it's right between them. Nothing wrong with that. And then a last wave would probably be similar to the first, and it may end up being about the same distance. Implying that it may not fill the gap on the first run if it didn't go any higher, you know, and you could end up seeing like a partial gap fill and then a pullback that then runs like the similar, not exactly the same, similar to the first wave. Just on average, that's pretty common. So you get like a 3-8 retrace or something, and then you push up again and fill the gap, and that's kind of the end of the move around 210 for now. This doesn't mean that it's over. It's just that's a wave, right? That could be part of a bigger wave, right? Like then you could have a much larger setup and at play. So if it got up here and it chills for a second and then pops up, fills the gap, maybe we have a bigger retracement at that point back to this floor, you know, and this ends up being like looked at like as a spring later down here. This is like a retest. And then you could have like a wave 3 or something, you know. So this bigger wave 1 followed by a wave 3. That's huge. But you're kind of like, at this point, we're not really there yet. So there's not much point in speculating like too much. That's about right though. So it would go back down to like roughly that floor. So the measurements for it are pretty good if it does set up an Elliott. My Elliott wave stuff is very, very bare bones, though. Yeah, and then the 1618 from there up goes to $4.17. So then you have a pretty decent chance it's going to go to 417. Maybe up to 5s. I'm not sure. I'm just making a simple 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Yeah. Maybe up to 5 something. I don't know. I'd have to look back and see what that, maybe why that matters. Maybe that. This area right here. This would make sense to me if it did continue to advance. But and it's an M cross because you go up and then you break out and come back, so on and so forth. And then I don't think it would go much further. I don't know why you would have any expectation at this point beyond what we've already talked about. I mean, the grander scale here certainly is good, but yeah, I don't know, man. This is another one of those. It's like it could happen. It could just be some massive move that comes way back up here for whatever reason. That to me looks about right because that's where the 2 hour is. We've been working our way out, right? And then then the 4 hour would be the next hit. So you'd hit 2, reject, come back up, hit 4. So that'd be there by then. The daily, I think at that point the daily would be like lower. So if it did make that reach, it would drag this daily down. And probably at that point, this is where it's generating like a real creek. Like I think the daily time frames where you're getting into big money analysis, and like that to me would represent like a future creek. Probably based on this, somehow based on like this original drop right here, because that's the way it looks. So my thought is that after moving back up, if it did make it that far to like 540, I'm of the opinion that it probably would not go further. If it has some kind of crazy motion, it has some kind of crazy motion, you know. But to me, this would probably be an up thrust to try to drive it back down just based on this. It never went low on the daily. It doesn't really make sense to see if it's not oversold yet, you know, this could easily just be like a cat ear. So you don't really want to tempt fate, I think, if it just doesn't make that advancement. I think the rest of this is a very strong question mark. Like, oh, but it already made it here. Look, man, I don't know the news on the chart. I don't know what they do. Maybe there's a reason for it. But if I saw like a random like move up like this on the chart and I just walked in, this looks like a bowl, like it's flattening. That to me would read as a potential like UTAD. And then I'd be looking at it coming down like really low. Yeah. Maybe take it that far. I don't know what this is though. So bear in mind, like I have no idea what this stock is or what it's about. I'm just saying, like from my point of view, even if that made like an impulse up to like 5, I don't think I would take it much further. And it's possible based on where this original low is that also plays in the 356. It's still a good trade. We're sitting at like $1.27 right now, you know. Like if this ends up going to $3 or something, it's up there. This is a wave right here that I'd be cautious of. I just kind of pulled this out of my butt, but it's there. It's got a few hits on it. This is like a cross wave from the top. So when a wave generates like this, it's like targeting like a potential low. It's possible that this is also a place of getting like hung up. It would depend on how you get there, when you get there, but that's another one that I would probably keep on this chart. So, yeah, I would just be inclined to be really skeptical of any kind of upthrust into this area above 3. I feel like that's where you'd probably try to sell. And then you'd be in a bit of a crapshoot in terms of like downside. But, like I said, this is not a bad trade. It's a good trade potentially. It's just getting started, you know. In some time frames, the RSI looks fine, but when you get up to like the daily, that definitely makes me feel more distributive. So did it hold? Almost. It's like double bottom right now. 126 held. If after this double bottom it reverses, maybe you could, might be a good place to try to enter. It's being oversold on the 1 minute. It's the first time it's been oversold since yesterday. Let's go 3. 3's still got some space. I don't know. If it's me and I'm trading it, I'd probably just think about it as a bounce and then wait, See what happens. Like I feel like if it bounced up, it could just be to like get that 1 minute crowd like, oh, they're buying in because it's oversold, but then it has plenty of space here to just do like a hook and then drop. And I feel like when you lay it up one to the next, you can start seeing why it might do that kind of, maybe, that slow walk down. That kind of thing. What about the volume? Well, like we said, like the last time this happened, right back here when the volume squished, there wasn't as much selling for one, so that'd be something to think about. But there was like a drop, extreme drop in volume, and then it just rallied again. So if you're really nervous about it and you don't know when to get in, if you think it's going to run big picture, you could just buy in at level to level to level, but you'd be buying higher than lower, so that's kind of backwards. But yeah, it is compressing a bit. I still like it better at like maybe 122. I think Dave is watching the beginning of the stream when I said, how are y'all doing, or something like that. Funny. Yeah, okay. I mean, it's breaking out. It's trying to go again. This is the one of the first stops, but it did come low, so I don't know. 126, 126. I double bottomed. So maybe, you know, like I said, maybe. It's kind of a mixed bag because I think at this point I'd be concerned about waves like hooks and stuff. None of this really structurally broke until here. Now that it's broken, you're going to watch and see if it's going to hold fast. I like it. I'm trying to like see if I want to get in, but I don't want to get in too early. I guess what I was saying earlier would apply. Like if you're really worried, you could buy. Just average down a bit. I'm just concerned it's going to dead cat here. Like push, like it's going to go again and then reverse, sell off. Like the bigger move hasn't finished yet. Yeah, I don't know how else to say it except that if this thing goes, it's probably going to be leaving pretty soon. I don't have the apex on the 24th. I've got the chart pretty much moving up by then through January, but if you look at the chart as it is, it's kind of a whatever type deal. Like it could be as early as, if it's already moving and it doesn't make a lower low, then technically that could have been the bottom. And if that's the case, then it gets there on the 15th, you know. That's more accurate when it comes to the trajectories that I have to say that. I think we're in for a decent, if this works out, we're in for a decent holiday season. It may not be great going into Christmas, it may not be perfect, but these layups are in the right spot. I can't believe I'm saying that because, again, I was pretty bearish when we made that up thrust and dumped through that first creek. We're still underneath it, but we're still underneath it. It's at 430. But I'm very optimistic based on a lot of things. Guys, I'm gonna go. I have to do some stuff today. I'm gonna be streaming tomorrow, but that'll be the last time I stream for a while. So I may pop into the Discord every now and then. I might do a video if I have time, but I'm really going to focus on family over the holiday. If it runs up, it runs up, you know. Hopefully you all are aware of what to look for. We're really looking at that 440 area first for support. And then, you know, what to watch out for if it's going down. You know, you need to be aware of what a breakdown looks like. So I'm trying my best to kind of throw all that information out as much as I can. And yeah, we spend a lot of time trading or charting and talking about the chart and how this layup looks pretty darn good. But at the end of the day, you can't base anything on this. Like, this is just a... What I mean is that, like, I have confidence in my own charts. You got to have confidence in your own charts. You got to have confidence in what you're doing and whether or not it makes sense. If this doesn't make sense to you and you think it's going to go down, then don't trade this. And if you do think it makes sense, I still would caution you that you have to do the right thing when it comes to like waiting for confirmation. I can't force you to wait for confirmation. I can't do anything. I can't tell you to do anything, but I can suggest to you that that's what I'm going to do. And hypothetically, if I was a financial advisor, hypothetically, I would say to the hypothetical client, you should probably wait for confirmation because it's not there yet. We don't have it. So there's nothing here set in stone, period. You know, GME, I feel largely the same way about. I don't feel like it's bad. It's not in a bad place. There's a lot of good reason to suspect that we go up to 38 and then maybe 50 and then possibly up to the 80s. Like it's partially there in that setup. So I do think we've talked about this kind of second idea of like a second move for a long time. I do think we're in the midst of that. We've already experienced some of it on GME and we're just kind of waiting for AMC. It's done something like it, but it's got a lot of weakness there. It seems. We'll see. You know, this is fine right now. This is good. It did come back down and check the middle. It didn't come as low as I expected, but it did come down and check it. It's right on the dot, which is good. You know, if it drops again, that's like a 50-50 kind of move. I wouldn't panic about it. It's fine. And then, yeah, honestly, this could be a really, really strong way to finish. Doesn't matter if it goes low or stays here and does this. Looks pretty good. So I'm going to leave it at that. I did not get to everything today. I never get to everything, but I got to get some stuff done. I have a lot to do over the next few days, so I got to get going. I appreciate you guys. I hope you have a good one, and I will talk to you tomorrow.